Everyone. I welcome you all to our BOS live classes, and the subject that we are going to start with is CA final indirect taxes. Now students, I am sure you all know this, that indirect tax plays a very big, a very critical role in the entire business setup. Many business decisions, where to purchase, how to purchase, how to do business are directly impacted by the selection of the state, the selection of the mechanism of working, the selection of your product. But at the same time, it is also impacted greatly by the indirect tax implications, particularly the correct indirect tax regime, which is goods and services tax. Just to give a brief, when we started taxes, the history is long back, pre-independence. We had income tax levied by the British government, we had sales tax, we had excise, and post-independence, many more taxes started adding to this list in the form of local taxes, which was earlier octroi, later on replaced by LBT. Then we had central sales tax. Then we changed sales tax to VAT. We changed central excise to mod VAT and then sen VAT. We introduced service tax. So multiplicity of taxes, and that too taxes being divided between the center and the state via Schedule 7 of the Constitution. Now all this, when we came to the 21st century, we realize that international trade is growing in leaps and bounds, and somewhere country as a whole needs to match with the requirement of the international parameters, with the requirement of international taxes, international trade mechanisms. And that is where the journey towards VAT, which was unified value added tax, started. The first step was when we went into globalization in 1994. We liberalized our economy and we also became part of the WTO. So from there, we had the journey embedded in unifying the taxes. We started converting our individual taxes into VAT, whereby whatever tax you have paid on the inward side, input side, would be available to you as a credit. Earlier it was called as VAT credits and VAT credit, which could be set off from the taxes that you have to pay on the outward side. But still, this VAT conversion was only beneficial partly because it allowed credit and set off of only the same tax. So if you are paying on the outward VAT, you can set off VAT. If on the outward you are paying excise, you can set off excise and service tax. It was still not giving the complete benefit of unified VAT, which was, I'll say, utmost necessary to make our products competitive in market, to lure foreign investments into India, and to have a good GDP and a good export surplus. On these lines, we decided to implement GST, which you can say is similar to VAT. So some countries name it as VAT today also. Some countries name it as GST. We decided to adopt the term GST. And then by Constitution Amendment in September 2016, we started our journey to GST. In this GST journey, what is slightly different as compared to international VAT is, internationally, majority countries who have implemented VAT have a single tax. Now, even on the form, on the side of the Indian taxes, what is appearing in form, we say that GST is one nation, one tax. But if we go to the technicalities, and as a student of chartered accountancy course, I'm sure you all should do that and you all will be doing that. We are not having a single tax technically. We are having a dual tax. So whatever GST we are levying, we are collecting, we are paying, has always two components, center and state. However, whenever it is interstate transaction, we have a single tax, which is combination of the two, which is called as integrated. But again, within the integrated, you have components of both center and state. So we have implemented a dual tax, which is called as GST, and which has the components of center and state. Now, when we decided to implement GST, the very first, very big question that we had to answer was, what would be our taxable event? What would be the subject matter? And how we would implement this tax? So today we are going to talk about the taxable event and the subject matter, how it is taxed, how levy collection is done. That is part of the second topic, second chapter. Now, when we decided to implement GST, the first question that we had to answer was, on what I will levy GST? So this question became relevant because if you see the pre-GST era taxes like excise, sales tax, entry tax, service tax, then you had the entertainment tax, you had the luxury tax. Each of these taxes were levied by separate acts. Some had the power drawn from center, some had the power drawn from state. But what was important was that each of these taxes had a separate individual taxable event. This taxable event is that activity, that transaction, that happening of something which would attract that particular tax. Now, for example, in case of excise, the tax was attracted on manufacturing. So manufacturing became the taxable event, taxable act of excise. Similarly, for sales tax, it was the sale, which is defined to mean transferring the property in the goods. For service tax, it was rendering or provision of services. For local taxes like entry tax, it was entering into the territorial limits of that local authority. So these were multiple taxable events. Now, if you want to make a single tax, you should have a single taxable event. Now, we wanted such a term that would encompass, that would cover all of the taxable events, and also any new taxable event. If, let us say, in future the government wants to extend its boundaries of taxes, because we all know, because of technology and now today, because of so many apps and different business model coming up, there would be new types of activities that would require to be taxed. So the government wanted such a term, such a concept that should be so comprehensive that it covers the present taxable events, plus it also covers all those taxable events that may arise in future. So for this, when we refer to the international jurisprudence, we refer to the international laws when we were drafting and crafting our GST law, we found the term supply. Now, see, normally speaking, the word supply is very generic. We have been using this word supply right from our childhood for varied activities. So I will say, kindly supply me some water. Kindly supply me a particular item. So supply is a more generic term. But here, when we come to a tax, statute, and the tax statute has made that particular thing the most underlying, I'll say, term of the whole subject, because it is now going to become a taxable event. You have to keep in mind that this taxable event, which is today supply under GST, is having multi-fold dimensions. It is not the plain generic supply that we all have been understanding till date before GST. So now we wanted to create such a taxable event. Taxable event, if I have to define, will mean that at the transaction, the event on the happening of which tax shall be levied. So you need to levy tax, like in case of income tax. What is the taxable event over there? The taxable event over there is earning income. So income is the subject matter and the event is the process of earning. Similarly, over here, the subject matter is goods and service, and the event on which we are going to impose the tax, we are going to levy the tax, is supply. So now from where do we get this? So actually the origin comes from section 9, which we are going to study in the second chapter, which is on levy. So section 9, now presently students, I'm talking about the CGST and the parallel SGST Act. The same section 9 is section 5 in case of IGST Act. Now, over there, what is covered in this section 9 and 5? It covers the levy provisions, and it says that there shall be levied a tax. Now, in case of CGST, it says central tax. In case of SGST, it says state tax. And in case of IGST, it says integrated tax. There shall be levied a central tax on, now again, CGST says, SGST says intrastate supply, and IGST says interstate supply. So they have used the word that the tax will be levied on inter or intrastate supply. So that is, you can say, the important first section that you should always refer to in any taxation law, and that section is the levy or the charging section, which is section 9 of CNS and 5 of IGST. So what does this section 9 says? It says that this tax shall be levied on interstate, intrastate supply of goods, service, or both, etc. So that is how we get our taxable event and the taxable subject matter. So the taxable event is supply. Now, as I mentioned earlier, supply is a very generic term. It is not a technical term like manufacture. It is not a technical term like sale. It is a generic term which is used in day-to-day usage without having any technical meaning. However, when it gets used in this taxation statute, it is given an artificial meaning. So kindly remember that the term supply, which we know in our generic sense, has no reference here. You will have to understand supply from the lens of the taxation statute. That is where you get section 7. Now, interestingly, any term is defined in section 2 generally of a taxation statute, or rather many statutes. But since supply, as I had mentioned, has multi-dimension, multi-fold facets, the government, the parliament thought it more apt to define supply separately in a section. And not only the section, if we have to understand the concept of supply, besides section 7, we have to refer to all the 3 schedules of the CGST SGST Act. Remember one thing, originally when the draft law was created, we had more schedules. Later on, when the final law is passed, which we are referring today, the Act only has 3 schedules, Schedule 1, 2, and 3. Now, all the 3 schedules are referring to the concept of supply only. So the backdrop of supply is the charging section, and the main provision defining, limiting, and also clarifying what and what not is supply. Everything is in schedule 1 to 3, which gets its reference in the main section, that is section 7. So students, in this chapter, we will be going through entire section 7 with all the respective schedules, where you will get to know and understand what is the meaning and scope of the term supply. Besides this, in GST, drawing the analogy from the service tax, we have a very special concept of composite supply, of mixed supply. So we are going to see, we are going to test the taxability of that as well. But that is a separate topic to be understood separately. Our first focus is exclusively understanding our taxable event, that is supply. Now, even where you see the definition of GST in the constitution, the definition of GST in constitution is also that it is a tax on supply. So that is also, if I have to give you an analogy, how supply is derived. So it is also having the reference in constitution. Now, let me sail you through the entire concept, entire subject matter of the term supply. Now, when we say supply, as I said, it is now going to be the most important concept in the GST law. But if I have to give you the most simplest analogy, just for your understanding, so I will say in Hindi, supply means sub pe apply. So in very naive language, very simple human language, if I have to explain what is supply, supply means it will cover everything, every type of transaction, every type of activity that any business is doing, any commercial activity will be supply. You can just keep this in mind. Though we are going to run through the technical meanings, the exceptions, the carve outs, everything said and done, just remember this three-word definition and meaning and scope of supply. Supply means every commercial transaction done by a business. Simple. If you keep this one golden sentence in mind, yes, I'm not saying that this will give you answer for everything, but definitely it will help you in understanding when we are going through various uh, technical provisions. And maybe at a point of time, you may suddenly find that this is getting very technical. Just remember what is supply in one line. Sorry. So with this one line golden rule, we can delve deeper into this subject of supply. So remember one thing, supply means all commercial transactions done by a business. Now, when you go through the entire concept of supply, which schedules 1, 2, 3, you realize or you'll find that schedule 3 is that particular provision in the entire supply concept which overrides all other provisions. Now, what is the meaning of override? Override means it is superior to all other provisions of supply, and it will hold the most primary, most superior position in the entire supply concept. What it covers? It covers those activities or transactions which the law has decided to treat as no supply. So it has decided to treat these transactions as neither a supply of goods nor a supply of services. In very simple words, Schedule 3 gives you what will be no supply. In the earlier regime, we had a similar list in the service tax law called as the negative list. So, since this is superior to all other provisions, we would first deal with this particular thing. But you'll say, sir, how it is superior to all other provisions? So, parallelly, I'll be taking you through the act. See, students, now at final level, it is very important that you refer to the bare acts parallelly. So, when we understand the subject of supply, we have to refer to the act parallelly. Now, if I have to take you through this act, one second, just allow me a minute. Okay, I'll just share my screen. So students, this is the Bare Act, Section 7. If I have to give you an overview, how does the Act refers to Section 7? It says it is the scope of supply. So it will cover what is and what is not supply. Then in subsection 1, they try to define supply and also provide you the scope, what will be supply. Then you come to 1A. 1A is, I will say, the classification section, because this subsection will help you determine that what you should treat the supply as, whether you should treat it as supply of goods or supply of service. So subsection 1A guides you to the classification of supply. So that is the most last stage. First, we have to understand what is supply, what is not supply. Then we'll go to the classification. Then comes our most important provision, Section 7, subsection 2. And as I said, it is the superior most section. It is the overriding section. Why? Because it starts with this. Now it says, notwithstanding anything what you are going to study about. So notwithstanding the main part of section 7.1, which is the main part which is defining supply, which is giving you the scope of supply. It is saying notwithstanding. Notwithstanding means make it subsidiary, make it junior First, I am having the superiority. What I will say will have the primary implication. So what it says, notwithstanding anything contained in subsection 1, so it means I am overriding subsection 1, I am superior to subsection 1. Certain activities which you are going to study in schedule 3 will be treated neither as supply of goods nor supply of service. Similar to this, further it has said, again some activities which you are going to study through notifications because that is to be notified by the government. Those activities will also not be treated as supply of goods or service. In simple words, this is the basis of the no supply transactions, the negative list transactions. So students, whenever you are studying any law, you should always start, means law means any provision, you should always first read that part of the provision which is superseding. Because if this is going to hold the primary importance because it is superseding some other section, it is overriding some other section, then you should first understand this, because after you cross the first stage, which is of no supply, then for remaining transactions, you have to decide whether it is supply or not. So coming back, if I have to put it pictorially over here, so in this concept of supply, when we will understand supply, so let us say, I'll draw here. These are all the commercial transactions that you are doing. So this box represents all the commercial transactions. Now, the law has created a demarcation saying that out of all your commercial transactions, some transactions which is now my outer ring, you have to exclude them because they are the no supply transactions. So if I have to just make it pictorial for you, so out of the entire transaction set, whatever transactions, commercial activities you are doing, because see, only commercial activities will be supply, we are carving out some layer because we are saying that this is not supply. Now, since this is superior, this is the outer layer, we'll first understand this outer layer because you have to first check whether your transaction is falling in one of these. Because if it is falling in one of these, no need to proceed further in any part of the definition of supply, because then it will never be a supply because of the overriding effect. Now, what will not be a supply? So we will start with that first. So our first discussion point will be the overriding provision. Now, as I just showed you, section 7 bracket 2 creates this. Now in section 7 bracket 2, you have two parts, clause A, clause B. As you can see, clause A says whatever is specified in schedule 3 list, and clause B says whatever will be notified. I have further broken down it into three parts. So what will not be supply is 7(1)(a), which will be schedule 3, then 7(1)(b), sorry, not one students, I'm very sorry, 7(2), which will be wider notification. Now, besides this, you know that time and again, in order to clarify any confusion, any doubts, the government has the power to give clarifications, and that is done through circulars. So this is anyways a generic power given in the law. So using that generic power, there are some transactions which are clarified through circular as not amounting to supply. So in these three parts, we will understand what is never going to be a supply or what transactions are always going to be treated as a no supply transaction, means it will never be taxed. So we will start with that first. And after understanding that, because that is a superior part of the provision, we'll go to the remaining transactions to then decide whether those transactions are also supply or not. Fine. Now, let us go to all these three parts. So the first part in this is Schedule 3. Now, there is a list given in Schedule 3. This, as I said, is similar to the negative list, what was famously called in the service tax, that there will be certain transactions which will be treated as no supply. Actually, students, also to remind you that towards the end of this session, that is in the last 30 minutes, you will be given opportunity to have a direct question and answer with me. So kindly ensure that whatever I'm teaching you, you are noting down parallelly at your end, so that if in any part of this deliberation you find that something is not clicking to you, something is creating a confusion, something where you require me to repeat, kindly put it across. Let us say somebody says, sir, kindly explain this in Hindi. That is also okay. So kindly make a note of all your questions, maybe with references to each of the parts that we are discussing, so that when you are allowed that opportunity at the end in the last half an hour, you should be ready with all the questions. Right? Great. Now, Schedule 3 is something which you need to be very thorough with, because whenever these transactions will come, you should be ready with the answer that I need not refer any part of the act further, because this is the superior part and it says that these transactions can never be taxed. Now, what are they? The first transaction is services. Services by whom to whom? So services which an employee gives to the employer, against which the employee is going to receive wages, salaries, or any component of wages and salary by whatever name called. So in short, the very simple point, the very first exclusion is where you are going to receive what is covered as per the income tax law. Now see, I'll try to link it with other subjects wherever required, first for better understanding, and also these linkages will help you answer many of the questions that you will get in exam. Student, just give me a minute. I'm feeling shivery. I'll just dress up with some blazer. Just allow me a minute, please. Yes, students. So now the first activity, which is always going to be outside GST, is your job. Now, if I have to give you a very simple understanding of what is covered in this first exclusion, which will be outside GST, is in the language of income tax, it is your income from, simple students. Now you have studied this very well right from inters. You have solved multiple sums specifically on income from salary at the inter level. So you are very thorough with the entire income from salary. You know what is covered in that. And now there will be different terminologies used. It may be called as basic salary, commission, allowance. You know which commission they are referring to, which an employee gets for increasing the production or sales, etc. So simple. Whatever is covered in your income from salary of income tax, that is what is kept outside this. So this entry is further clarifying that services given by employee to employer in the course of employment. So this is very important, where anything is done by the employee for the employer, but it is not in the course of employment. If it is in the course of employment, it is outside the concept of supply. However, where something is done which is outside the scope of employment, that will not be excluded here, and that would become supply. So I'll give you an example. So let us say I'm an employee of your company, I'm chartered accountant, and the company allows me that besides this job, besides this employment, I can also do personal professional assignments. That is, I can take up some consultancy. This is allowed as per terms of my salary contract. So I'm also doing personal consultancy. Now, in this relation, I am providing a professional consultancy to my company itself. So where my company got a particular issue, they came back to me, but they came back to me not as the employee. They came to me in my professional capacity, asking me to give professional advice on that. So please understand, the same person, that is myself, can be acting in different capacities. So when I am doing my service as an employee of the company under the employment terms. So see, I'm having some employment terms over there. My scope of work, everything is decided. So whatever is covered in my employment scope of work, that is outside GST. But even in income tax, you'll find this. So that is why I gave you firstly the analogy of income tax, that I may also be working parallelly in my personal independent capacity. So in my independent capacity, whatever I'm working, if in my independent capacity, I'm doing something for my company, it will be outside my scope of employment. In that case, I will step into the shoes of professional, and the activity which I will be doing for my company will be treated as supply. So please distinguish this. Here, multiple examples I have given for your future reference. These are the ones same which I'm explaining to you in simplified words. So understand this, that when I'm working as an employee for which income from salary head applies, all that goes outside GST. But in the same time, if I'm also allowed to work independently, then whatever I'm doing independently, which is not covered in my employment terms, that would become supply. So students, I hope you have understood this first part, what is not to be treated as supply. In relation to this, we'll again get reference of this in another schedule, that is schedule 1, which we'll be dealing with later. So, but for that time, you just keep this point in mind. Now we come to the other parts. Now part 2, part 3. If for both these parts, again, I have to give you some analogy. I will tell you that whatever are your constitutional statutory duties or functions that is also kept outside GST. Now somebody says, sir, what is this? So our Constitution of India has made certain activities part of the Constitution. Like you will understand with the first entry number 2 itself that whatever courts are doing, tribunals are doing, what are they doing? Their role is to impart justice. Now, imparting justice is covered in Constitution. In fact, wide different articles of the Constitution, the High Court, the Supreme Court, the tribunals have come into existence. Now, since these courts, including district courts, High Court, Supreme Court, and these special courts, which are called as tribunals, have been created through Constitution, and the Constitution has put upon them some duty to do something, like in this case, do impart justice, then these activities or these acts of court and tribunal to impart justice, in my language, becomes the constitutional statutory duty of the court or constitutional statutory functions of the courts. So the simple answer or the simple point to remember is where you are doing any activity which the Constitution has asked you to do. So that becomes your constitutional statutory function. And once you do a constitutional statutory function, whatever you get as remuneration fees against that, that will not be leviable to GST. So as you can see, in point 2, what is covered is services by court tribunal. In point 3, what is covered is functions performed by members of parliament, state legislature, panchayats, municipalities, or other local authorities. And similarly, duties which is performed by any person, but in pursuance of the post which is given to it by the Constitution. So if you look at these different things, even I'll just read out the C part. Again, what it covers, duties performed by any person, maybe in any capacity, but for whom? For any body which is established either by the central government, state government, local authority, and not in the capacity of employee. Why not in the capacity of employee? Because if you are doing anything in the capacity of employee, anyways, it is outside GST as per para 1. So I need not require this para 3B, 3C for it, right? So that is why they have said other than in the capacity of employee, because for that you can get the exclusion in first para itself. So what is covered in 3C is all those duties which you are performing, and you are performing it in the capacity of chairperson, member, director, etc. of any body which is created by the government. So in all these cases, if you commonly observe, there is a common thread. What is that common thread? Is what you are performing is a duty, is a function which is imposed through the Constitution. So it becomes a constitutional statutory duty that is outside GST. Now, when we say this, we also have to see some specific activities, like you have different types of other bodies which do parallel thing, at least in the language of a common man, that is imparting justice. Like here, one example is covered. You have a forum called as Consumer Dispute Redressal Commission. Now, this is again a forum which is created for giving justice, because as you can see the name, what it is going to do, it is going to resolve the disputes of consumers. So for consumer dispute, a specific body is created called as Consumer Dispute Redressal Commission. Now see why we are understanding this, because I gave you a general rule. What is important to be understood is that can all these activities, what you are seeing, because in your day-to-day life, you will not get the words which I have written, constitutional statutory duty. You will get each of these activities. So some client will come to you. The client will say, sir, I have paid fees to this body. What you have to check, students, is this. Is that body created under any provision of the Constitution? If yes, no GST on the fees. So here, as you can see, this part, what I have covered, this Consumer Dispute Redressal Commission may not be a tribunal literally. So first thing, it is not a court, it is not a tribunal, as they may not have been set up directly by this article of the Constitution. So firstly, they are not tribunal or courts directly, but they are clothed with the characteristics of a tribunal. So important to understand is, many times, see, this is the change in the terminology. Had this word been Consumer Dispute Redressal Tribunal, you would not have thought anything. You would have directly given the answer, it is no supply. But since the word is commission, in some other case it will be a board, in some other case it will be authority. What you have to see is not the terminology. You have to see the nature. And if by nature what it is doing is the act of a tribunal, then the final answer will be, it will be no supply. So consequently, since its characteristics is that of a tribunal, so the fees paid by the litigant while registering complaint to this commission are not leviable to GST. Any penalty in cash imposed or amount paid to these commissions will also not attract GST. And this is clarified also by one of our circulars of GST. So students, what we have to understand is, see, like for first para, first entry, I gave you analogy. So why I'm giving you the analogy? Because actual name will be different. Like you will be given some remuneration is paid to the employee, share in profit is paid to the employee. Now, the moment you read share in profit, you will say, oh, he's getting profit, so it will be business. No, go to Income Tax Act. Over there also, it is clearly given that even though what you are paying to the employee is some share in profit, but if that is paid to the employee in the capacity as employee for doing the employment work, it will still be taxed under the head salary. So that is why I gave you simple analogy. Maybe the name can be anything, but if that payment will be taxed under the head salary, no GST as per para 1. Similarly, here I have given you an analogy where what you are doing is a function. Firstly, it is statutory because it is created through some act. And secondly, that act or that particular body which is doing that statutory function, it is drawing its power through constitution. So wherever constitutionally any duty or function is imposed upon you, either directly or through some statute created by that article of the Constitution, the activity performed by that body, by that person, will always be outside GST. Like here in para 3, we see all our parliamentarians. So when they are elected as parliamentarians, they are given some specific roles and functions. Some are made ministers, some are made part of some body committee. So when they are performing those functions, whatever remuneration they may receive, that may not be taxed as salary. Even again, now again, I'm linking to salary and income tax because I believe you have studied this earlier. So making a linkage will make things easier. So over there also, we have studied in salary that whatever the members of parliament receive is part of other sources. If it had been part of salary, we would not have required point number 3. It would have got covered in first para itself. But if you remember your income tax enters, so payments made to parliamentarians are covered under income from other sources. So that is what we are referring over here. So now, even though it is covered under other sources, but why it will not be leviable to GST? Because of the second reason, that is, it is a constitutional statutory function which these parliamentarians have to do. Similarly, for B, I'll give you an example. So tomorrow, after qualifying as a chartered accountant, after few years of practice, tomorrow you are appointed C and AG of India, Comptroller and Auditor General, right? Now, when you are holding this position as a Comptroller Auditor General of India, again, you have to remember, this position is wide constitution. Now, since this position is wide constitution, hence whatever activities, duties you are performing, again, CNAG will charge some fees to that government body whose audit it is doing. That will be outside GST. So that is what is the analogy, students, for part 2 and 3. Then comes part 4. Part 4 is pretty straightforward. So whenever a person dies in India, or rather I should not say only India, across the world, there is some ritual to be performed for disposing of that particular body, which may be funeral, which may be burial, which may be crematorium. So under different beliefs, different acts are performed after the death of the person. In some cases, they are buried. In some cases, you put fire to that particular body. In some cases, you create a tomb of that particular body. Whatever it is, these activities will always be considered as no supply. Now, I don't know whether you know this, that even if you have to dispose of the body by burying it or by performing funeral or any of these activities, you have to first go to your local authority, and there is some charges for doing that. So those charges will be excluded. So all services relating to funeral, burial, crematorium will be excluded from GST. Similarly, for transporting the body and also for preserving the body. So let us say for some reason you have to preserve the body for 2-3 days. So where do you keep the body? In a mortuary. And there is a transportation of the body many times in ambulance or at times in different types of vehicles. So the transportation activity and the preserving activity, that also is given a blanket exclusion. So that is another activity which will be outside GST. Now coming to something very important, that is what is two specific acts of immovable property, or rather two specific types of immovable property. One is land and the other is building. But which building? I will just add a word, completed building, which is ready to use, and in the language over here, of which the completion certificate has been issued. So this is how we'll know whether a building is complete or not. So the local authority is issuing a certificate. At times it is called as occupancy certificate, at times it is called as completion certificate, whatever. So whenever you sell such a land or such a building for which you have a completion certificate for that building, such a sale of land or such a sale of completed building will be outside GST. Now, why that? If again I have to give you analogy, students. So the analogy is what you have done is sale of immovable property. Now, interestingly, students, when we'll proceed, you will find that the law is presuming immovable property to be meaning only two things. One is land and one is a completed building. Completed, again, as I said, ready to use, for which a completion certificate is done, or where people have started occupying it, which is called as first occupation. Interestingly, if you book any flat, shop, office in a building which is under construction, and since it is under construction, this has not happened, correct? In such a case, for the under construction building, whatever you have done is not falling in the exclusion list. So till the building is under construction, and if somebody books a flat, which is nowadays a common feature, that many times we know that this project is getting launched or the project is going on and you can see some structure, and at that time you go and book a shop or a flat or an office, you are levied GST on that. So interestingly, now you will say, sir, but that is also immovable property. So that is a dispute which will get resolved over a period of time, whether that should be treated as immovable property or not. But in the present situation of the GST law, only completed buildings which have got the completion certificate or where occupation of that property has happened, for the time being, the law has only excluded that. So what is excluded is sale of immovable property, which is land, completed building. Now within land, there is again a scenario which is called as land development. Now see, in land, what may happen, students, is one is you go and buy bare land. Second is you go and buy land where already plotting is done. So there is a big land parcel. So one is you buy the bare land in this form as it is, that is anyways outside GST. But over a period of time, a new dispute arose. Nowadays, again, students, you'll find this, that many times there is a big piece of land where small plots are created and some plot numbers are given. Right? Now, you go and book one of the plots. Now, how this is done? Some developer has taken this bare land parcel, which may be in multiple acres, and that person has carried out some development activities. What that person did? That person got the land converted into NA. NA means non-agriculture, only then this is allowed. And it has carried out all these activities of leveling, then putting drainage line, water line, electricity line, means making it ready for final use. What is the use? Then you can construct building over there. Now, when somebody is converting a bare land into all these activities, then what is the resultant land? It is a developed land, what we call as plots. Now, a question arose that if somebody is selling the whole land parcel, no doubt. But what if somebody is selling a developed land, which in our language of day-to-day is plot? Whether that will be taxable, because now some activity has done and some people thought that it is similar to construction of buildings. So what is the answer? So that has been already clarified, that even where you are selling a developed land, it is clarified that it will also be treated as sale of land, because a bare land or a plot is ultimately a piece of land only. So whether a bare land is sold without any activity of development or a properly made plot is sold, all will be covered under this para and hence no GST. So relating to land, this is one important clarification. However, it may be noted that now see what has happened. There is one developer who has purchased this land parcel and appointed a person who is going to do all these activities. Which activity? Activity of development. Now, importantly, the activity of developing the land, that is doing all these things, is what is taxable. Please understand. So as a landowner, see, I purchased that land parcel, which is, let us say, 10 acres. And now I have appointed you. Ki boss, now you do one thing, come here, bring all the types of bulldozers, etc. and develop this bare land into these plots. I give you the entire outlay. Now you are the works contractor. Your role is digging, leveling, laying down pipelines, making the markings, making some roads. This is what is the land development activity. So the land development activity is not excluded because that is a separate service. That is not land. So developing land, this activity of developing land is taxable. But land before development and the land after development, which is plot, if somebody is selling that land parcel, that is not taxable. I hope this is clear, students. Now coming to sixth activity. When we will read the definition of goods after this, you will find that goods have been defined in GST to include actionable claims. What is actionable claim? That we'll study along with the definition of goods. So right now I'm not talking about actionable claim. But the point is, actionable claim are included in goods. Now tomorrow, if somebody does supply of goods, we already have discussed at the start that it will be covered under GST because GST is tax on supply of goods or services. Now, here comes a question of goods, and within goods, as I just said, actionable claim is included. But when you come to this para 6 of schedule 3, what it says that actionable claim other than some type of actionable claim is in Schedule 3. It means what? That out of all the actionable claims, keeping aside some actionable claims. So this box is now representing actionable claims. What is actionable claim? We'll discuss. So out of all the actionable claims, few which are called as specified actionable claims, if you supply this, it is taxable. But other actionable claims, other than this, if you supply this, it is not taxable because actionable claim is covered in Schedule 3. So tomorrow, if anybody is supplying actionable claim, it is outside GST because it is covered in Schedule 3. However, within this, there is a carve out that actionable claim except the specified ones. So only specified actionable claim, if you are supplying, it is taxable. Other actionable claims, if you are supplying, it is not taxable. Students, I hope this is clear. Now, two things we'll have to understand. What is actionable claim? I'll explain that later when we go to goods. Right now, we have to understand what are specified actionable claims. Now, specified actionable claims, firstly, are taxable because actionable claim is outside GST as it is put in Schedule 3, but other than specified actionable claim. Now, what are specified actionable claims? So, specified actionable claims are these 6 activities. Now, we all know what are these: betting, casino, gambling, right? If you see movies which are showing you a 1990 or earlier era, many of the movies are showing gambling. Many of the movies are showing horse racing. So, whenever you do any of these activities where you are staking money, actually staking money is done in all these activities. So whenever you are staking money, that is, you are saying that, okay, if this happens, or you are saying India will win today, I put my 100 rupees bet on that. Or you go to a casino that, okay, if the dice is rolled, it will be number 8. I put 500 rupees on this. So when you stake money, when you put your money on stake in one of these activities, correct? Na? We put our money on stake. See, betting, gambling, this is very common. We are putting our money on stake. Horse racing, you may not have done, but you have seen it in movies. Similarly, lottery, we see day to day. You have many lottery selling stalls. And nowadays, you have, in fact, online lottery, where again, you put some money on stake, saying that this number will be the lucky draw today. All these activities are treated as specified actionable claim. So whenever you are staking money in any of these activities, it will be taxable. Now see what is interesting. These are all examples of actionable claim. And as you all know, all these activities, students, if you look at it from the social angle, these are not good for the society. I hope you understand why. So these are not considered as good acts for the society. In fact, if you see Mahabharata, entire Mahabharata war was happened because of one act of putting everything on stake by Yudhishthira, right? So there itself shows the social implication. So by taxing it, and when you study more about this, you'll find that these are taxed at the highest rate today, which is 40%, which is the highest rate of GST today. So what government has tried to do? Government has tried to tax the antisocial activities. How? So they do not want to tax other actionable claims for a reason that we'll study when you study actionable claim. But out of all the actionable claims, since these are antisocial activities, so somewhere the government is taxing them. Now in this, a new item which is recently added is this. Now in past few years, a new trend has started which is a type of betting only, which is a type of gambling only, but it is coming to you in the form of some game. So there is some online game. Now see, there are two things. One is only online game and one is online money gaming. Now what is the difference? So in online game, you are playing a game. So what is an online game? Online game is where you are playing a game on the internet or any electronic network, right? So online game is all the games that you are playing. So I don't know whether you all have done that, but our childhood, we first time had that gadget in the hand for playing some game. Slowly, steadily, that gadget got converted into a television driven game where you had a set top box which was connected to your television and you were playing the game on that. Now all those games have come in your mobile phones and using internet. You can play it on your laptop, etc., by going to a particular site or app. So these are all forms of gaming. Out of that, when you play any game online using internet or any electronic network, that becomes online game. Now, within online game, there is something called as online money gaming. So see, online gaming is very wide. It will include both online money gamings and other gamings. So the question is, what is online money gaming? So online money gaming or online money game is where for playing that game, the player again, now here the word is play, I'll replace it by the word stake. Because see, what is the difference between a simple online game and online money gaming is, see, many games you have to pay by paying a charge. That okay, to play this game, pay rupees 100 and then we will allow you the excess. That is normal. That is not a problem. So when we started playing and when all these digital games came up, like even when you go to mall. So I'll give you another example. When you go to mall, you have a game section, a kid zone over there. And to play any game, there is a swipe. That swipe you do, so you can do bowling. Now, within that swipe of 500 rupees, they allow you bowling of 1 hour, for example. Now, it is okay because there is no staking. But when you stake money, now here, since now these things are done online, you may stake money, like we understand what is money, or many times, instead of money, now a new thing has started. You are staking virtual digital assets. What are virtual digital assets? So you have bitcoins, you have so many things which are now virtual form of currencies and all, which is called as virtual digital assets. Again, you find the definition of this in the income tax law, because income tax law also in 2022 introduced special taxation measure on virtual digital assets, and from there only we have drawn that analogy. Now, why I'm saying stake, because here the word is pay, because stake is you are playing the money, playing this online game by paying money, but how? In expectation of winning money back. So either you'll win money back or you'll win back some coins like the bitcoins and all. So the problem is a normal game is where you pay 100, 500, as I gave you example of mall, you go for bowling, you swap 500, you play for 1 hour, or you sit on some particular gaming console where you are doing some driving, where you are doing some fighting. So there are multiple games, and for playing that game, there is a fixed charge. But what is most important over there? There is no expectation in return of money, money's worth, or digital asset. But wherever there is expectation of something of money, money's worth, where there is a chance of winning, then there is a problem. Then it becomes money gaming. So one is gaming, online gaming, one is online money gaming. Here, what is covered is online money gaming. Why? Because again, it is having the character of betting gambling. So see, one is gaming for your entertainment. That is okay. You pay 100, I allow you to play a particular game for some time. You play 100, you pay 500, I allow you to play this game once. And if you win, you can continue, or else matter is closed. That is okay. But where I say, if you win, I pay back so much amount. So where you are playing by staking money, and what is staking, you are having an expectation of winning back the money or money's worth or the virtual digital asset. Then it will become online money gaming. Now, when it will become online money gaming? When this particular part is satisfied. Now, how is this happening? There may be an event, which may be a game, a scheme, a competition, or any activity or process. Whether or not the outcome or performance is based on skill, chance, or both. Now, why this part is added? Because there is a long dispute going on, students, in the court, which is very recently settled by the Honorable Supreme Court. But when this particular provision was crafted in 2023, the dispute was going on in the courts that if it is a skill-based game, then it will not become betting. But if it is not a skill-based game, then it will become betting. Now the court has put to rest all these disputes. So anyways, this amendment indirectly has been validated by the courts. What does the Honorable Court said? That whether your game requires skill. Now see, many of our game require skill. Not everybody can go to level 10 and 100 and 400 level. Only those people who are very skilled, who are attentive, who now have studied the entire game's process and are now very skilled in playing that game. It may be any game, a normal snake and ladder game, but it may require skill. But there are certain games which are purely on chance. So you roll a dice. Now there is no skill involved. Only at rolling a dice. Now it is purely dependent on your destiny, on your nasib, what number will come. That is a game of chance. Now there is a long drawn dispute that whether game of skill can be called as betting. Honorable Court has said that the moment you stake money, even if it is a game of skill, so whatever game you are playing will require your skill. Only with skill you can win, but we have no differentiation. So it may require skill or it may be based on chance, or there are games which require both. Some part is skill, some part is chance. We are making no distinction. It will be taxed. Again, an interesting point came that in some states, because of their respective state laws, the betting and gambling activity is banned. But now see, when things are happening online, again, it is very difficult to control from where, who is playing what type of game. So even in this definition, they have clarified further whether the same is permissible or not in your state by the laws created by your state. Again, that will make no difference. So simply put, what is online money gaming? You are playing a game by putting money, and that money is not for playing the game. That money is like betting, that if you win, you will get back a particular amount of money or something in money's worth, etc. That will become a taxable activity. So where it is only playing a game, and for playing game I'm charging some amount, it is normal activity. But where it is in return, it is a taxable activity. So since students, this online money gaming as defined again becomes this similar part of activity, hence that is also covered in actionable claim, which will be taxed, that is specified actionable claim. So if I have to give you the logic of this, these are antisocial activities which the government is indirectly, see, you will say, sir, then why do not the government prohibit this? See, that is not so easy, because again, within constitution there are some restrictions that you cannot restrict every activity of business and trade. So instead of restricting it, prohibiting it completely, what government does, they allow that particular activity, like even sale of tobacco and sale of certain specified types of alcohol and liquor, which are actually not good for society, but government is allowing. Some states have banned, but multiple states are allowed, right? So similarly, all these betting, gambling activities, some states have banned, some are allowing. But then what they do is, instead of prohibiting it completely, they allow it, but indirectly, one, they put some restrictions, conditions, and two, they impose heavy taxes. That is a different way of restricting them. instead of prohibiting them completely. So that is what is done here also. They have included these activities in specified actionable claim. So presently these 6 activities are specified actionable claim, and only these 6 actionable claims will be taxed. Other than this, remaining other actionable claims will not be taxed. See, red always is tax and green is always what is not tax. Right? Fine. Now, students, within this list of no supply, we have some very special activities. These are regular trade activities, but they are covered in 7, 8, in fact 9 also, and 10 also. Now, within this 7 and 8, both these are covering activities which are relating to international trade. Now, there are total 4 types of activities covered here. One is in entry 7 or para 7, and remaining are covered in entry 8. Within 8, there is one more amendment, that is 8AA. Right? So 1 second, I'll open it from here. Sorry. Yes. Just remove the markings. See, I keep on referring act multiple times. So every time I always prefer doing this because this helps us understand, retain whatever we have done. Right? Okay. Now, we are in this next part of Schedule 3, where Para 7 and Para 8 covers different activities of international trade. Now, see, there are different purposes of putting activities in Schedule 3, as I showed you here. First was employment. 2 and 3 are constitutional statutory functions. Then 5 is immovable property transaction. Then 4 was activity relating to or happening after death. 6 was antisocial elements. Now 7, 8, they are put in Schedule 3 to promote international trade. Now there are different activities which are done in the course of international trade. Now again, students understand the analogy of 7 and 8. See, wherever what you are doing is part of international trade, every government would wish to promote its export, and on import side also, it will not always seek to restrict the imports, because in fact now we are dependent on so many imported items. That is what you have seen the change of India before 1990 and today. That today we are having so many facilities, so many new items we are using. Why? Because the bans have been lifted. But at the same time, it is very important that the activities should not be unnecessarily taxed. The activities should not get double taxed. So on the import side, it should not get double tax. On the export side, it should not be taxed at all. Only then we get the benefit of competition in the foreign markets. Now, with this particular analogy, that we want to promote exports, make it tax free, and on the import side, we want to avoid double taxation. Entry 7, entry 8 has been carved out. Now, in entry 7, what you will see, students, is what is covered are different types of international transactions. Now, I'll take you one by one. I'll first start with entry B. So, sequentially, what is happening is, let us say, this is our India, right? Now, whenever any international trade is happening, you come to our Indian borders, which is here, the Bombay coast, the Goa coast, and then you go to the southern coast, etc. And you come through the sea route. Now, we will study later in customs that India starts somewhere in the sea itself. So there is a artificial boundary in the sea, which is called as our territorial limits, which is 12 nautical miles. We'll study this in detail in the customs chapter later. But beyond this 12 nautical miles, the entire sea is called as high seas. So where the goods are in transit in our common language, your goods are in transit. So whenever they are in transit, which in this diagram, I'm saying the goods are in high seas, that is, they have not yet entered our territorial waters and they have not reached India. If at that time any trade happens, how to tax it? For this, we prefer the customs law. The customs law also says if you are doing any trade while the goods are in high seas, that is in our language in transit, we don't want to tax even under customs. Why? Because when they will reach India and you will clear the goods here into India, I am anyways going to collect the import duty. Same analogy has been put in GST. So what is 8B, which is called as high sea sales? So let us say I have ordered my goods which are coming from the UK and still the goods are in transit. It will take more 7 days to reach the Indian port, and then I will file bill of entry and clear the goods from the customs. See, if you do not know these terms, don't worry. All these things you are going to discuss detail in Customs Act. Now, while my goods are today in the high seas, that is in transit, and they are going to reach after 7-8 days, you come to me, you say, I want to buy these goods. I said, okay, boss, wait for 10 days. In 7-8 days, the ship will come. Then 1 or 2 days I'll require to get the goods from customs, and then I can bring it here and give it to you. You say, sir, if your goods are in high seas or in transit, no problem. You sell it to me today. You sell the goods which are in transit today itself. And whenever these goods will reach India, at that time, instead of I going to the customs port, you will go and collect it. So what you tell me is, sir, anyways, you will clear from customs, you will give it to me, no problem. You sell it to me today itself. So what I am doing is, I am doing sale in transit. So where the goods are still in transit, I have sold them. Now, since here in transit means in the high seas, that is why it is commonly referred to as high sea sales. So I am the consignee because the goods are coming to me. And while the goods are still in the sea, I am selling this to you. You are that other person. Now, obviously, how this will be done today, I do not have the goods physically. So what I will do is I'll make endorsement on the document of title. So I have received a document of title for these goods, which prove that I am the owner. On that, I will say that you are the owner. I will endorse it. Endorsement you would have studied earlier in your CA foundation. So by endorsement, I am selling, I am transferring the title in the goods to you. And these goods now become your goods today And after 7 8 days, whenever the ship comes, you become the importer. You go and do all the custom process and get the goods. Now, in this case, the question was today where I have sold the goods to you. So technically, I have sold it today. Whether for this sale done by me to you, whether there could be GST. I have already said there is no customs. So on similar lines, what our GST law has done parallelly, they have said that anyways, we will be levying this IGST in this case because it is an international import transaction at the time when the customs duties are levied. So customs duties will be levied here, not here. So since no custom duties are levied while the goods are in transit, that is in high seas, we will also not levy GST. So that is why making it parallel to the custom law, they have said that while the goods are in the high seas, if it is sold, there will be no GST because GST in case of import, you'll again study this at the time of customs law and even in the GST law later on, that at the time of import of goods, the IGST is collected along with customs. So be it the same case. So first item which is kept outside the GST law is high sea sales. Fine, students. Now proceeding further. Now your goods have reached India. Let us say Bombay port. Your means my goods have reached, and let us say I have not done high sea sales. So first, if I've done high sea sales, you become importer, you will clear the goods. My high sea sales is outside GST. When you will clear, you will pay all the custom duty and you will also pay the IGST. So first exclusion is if I have sold it in the high sea itself. Now second, I have not sold it to you. Goods come to India and on the port, that is I go to Bombay or I send my custom house agent who will be clearing the goods at Bombay port. Now, when you will be clearing the goods, sorry, when I will be clearing the goods at Bombay port, again the custom law allows me to keep the goods in warehouse. Which warehouse? Customs warehouse. Now, interestingly, again, as per the customs law, while the goods are in customs warehouse, so they are imported from UK, but I have not cleared it. Clearing means I have not taken it from the customs. The goods are kept in the custom warehouse. Now, when goods are kept in the custom warehouse, what is the treatment? Just give me a minute. Yeah. Now, in customs, there is a provision that whenever the goods are coming to a port, I may decide not to take the goods. Clearing means taking the goods means, in short, taking it from the customs permanently. Instead of that, I can keep the goods for a temporary period in the customs warehouse, which is called as custom warehousing provisions, and the goods are kept in custom warehouse. Now, again, the customs law says till the goods are in customs warehouse, again, there is no import duty to be paid. And again, what I explained you earlier, that since IGST on import of goods will be collected at the time when customs duty is collected. So obviously, while your goods are kept in customs warehouse, if custom duty is not collected, we even cannot collect IGST. Now, I imported the goods. They came to Bombay port. Instead of I bringing into my factory, I asked the customs to keep it in their warehouse for some period. and after 6-8 months I will clear it. Now, today my goods are kept in the custom warehouse. Again, you come to me, you tell me, ki I want to buy these goods. I said, no problem. I'll go to customs, I'll clear them, I'll give it to you. So they say, okay, your goods are kept in customs. Very good. Anyways, you also today do not have the place or the need to use the goods immediately. So you said, best, let the goods be in customs only. You sell the goods to me now. After 6 months, you say you will go and clear the goods. So what I was going to do after 6 months, you will do that. So I agree. Again, that is again allowed. So like how I could sell the goods in transit, here I am selling the goods which are warehoused. So while the goods are in warehouse, I am selling them. So like how sale in transit has happened, today I am selling you these goods which are still in the warehouse. Correct? So these warehouse goods will today be not taxed under GST law. Obviously, IGST was supposed to be paid, but that will not be paid today because again that has been kept outside. So wherever any sale or supply happens of which goods which are kept in warehouse, but which warehouse? Custom warehouse. And how do you know? Because they have said before clearance for home consumption. So until I have finally taken the goods from customs, that is what is called as home clearance. Until that is done, so till the goods are kept in custom warehouse, there is no custom duty also. So on similar footings, there will be no IGST. Now in the students, there is a recent amendment in this 8. What is that? Now this is similar to the point A which we just studied, that is warehouse goods. Now similar to customs warehouse, there is a special warehouse called as the free trade warehousing zone, right? Similarly, you have a concept which I'm sure you all know, special economic zone. Now both these are a designated place, generally near the ports. Now we have special laws whereby whatever this place is designated as a SEZ or as a FTWZ, both names. Either it is designated as a SEZ or it is designated as a FTWZ. Both these places, students keep this simple. Again, I'm giving an analogy, a logic. Both these places are treated as outside India, right? Only for the purpose of applicability of various laws, majorly taxation law. So just keep in mind that these places are physically in India, but for the purpose of application of different laws, including mainly taxation law, they are deemed to be a foreign land. Now, if you understand this analogy, and if you read it with the previous entry, which I just explained, warehouse goods, so the goods are presently kept in these places. One is the special economic zone, SEZ, or FTWZ, right? So we use these terms, SEZ, which you already know, and a new term, FTWZ, Free Trade Warehousing Zone. Same logic, students, here. So what is covered in this is supply of goods which are warehoused in SEZ or FTWZ. So where your goods are kept in this, similar to the logic of custom warehouse. Again, these are treated as foreign land. So while the goods are kept there, if I sell it to somebody else, on same analogy, this is also outside GST. Because again, it is a foreign land. So it is like, for example, if I have to give you analogy, the goods are in Sri Lanka. Now, if somebody is selling goods which are in Sri Lanka, how does Indian GST applies? It will not apply. Same logic is here. Then we come to merchant trading. Now, merchant trading is again, students, a very specific and a very interesting scenario of international trade. So as I already gave you the analogy of both 7 and 8 is to promote and ease out international trade. Promote is in terms of export to make it duty free, and in terms of import to avoid multiple taxes and make it easy for the businesses to do it. So in case of merchant trading, what happens? So merchant trade is also called as out and out trade. What is out and out trade? So let us say I get an order from Australia to supply a particular quality of, you can say, bed sheets. Now, I have a very good manufacturer of this in Bangladesh. Now, what I would do, I would import the goods from Bangladesh and sell it to this person in Australia. This is what I'm doing. So basically what I'm doing is trading. Now, when I'm doing this trading, first possibility is I'll physically bring the goods in India, and then from India, physically I'll send it to Australia. But as you know, Bangladesh is on this side, Australia is also on this side. So geographically, for me, instead of first bringing to India and then sending to Australia, it is more convenient that I directly send it to Australia from here. So this is Bangladesh here, correct? I can send it directly. It will be more cost effective. It will be time saving, and it will also make it easy for me because I don't have to do physically. If I bring in India, I have to first clear it, then again do the export procedure. So for me, everything is made easy, and even the cost and time is saved. So what I do is, instead of I physically bringing the goods from Bangladesh to India and then from India to Australia, I directly say the Bangladesh person, you deliver the goods to Australia, which physically is here to here. Now, when physically the goods are directly sold from one non-taxable territory, which in my example is Bangladesh, to another non-taxable territory, which is my example is Australia, without the goods physically coming into India. Now, the moment the goods are not physically coming into India, our customs law also does not apply. So, from accounting perspective, I have a purchase from here and I have a sale here. So, in my books, there is a transaction of purchase and then sale. But physically, the goods are directly going from Bangladesh to Australia. This is what is merchant trading, or in my language, out and out sale. Again, if you look at our laws, you will find that there is no implication even of customs. So on the same lines, no implication of GST, which is IGST. So in all these four transactions, what is common? No implication of customs, and hence parallelly no implication of IGST. Then comes, students, another scenario which is in 9 and 10. Now in 9 and 10, what is covered is a specific scenario of insurance. Now, I am an insurance company. You can name anyone, whichever you like. Now, let us say Allu Arjun, or today another one of my favorite, Yash. Both are today my most favorite film stars. So they are approaching me. Now they want a policy on their life. Now Allu Arjun says, I want a policy of 500 crores. Yash says that after his recent project of Ramayana, his worth will be 750 crores. I say, okay, fine, great. In fact, I'm happy that I will be doing such large insurance, because more insurance means more business, more premium. So I'm happy. But at the same time, I'm seeing a big risk that, God forbid, this should not happen. But let us say, if for some reason something happens to them, I'll have to shell out 500 crore. So I may have received premium of, let us say, 5 crores. I will be receiving, let us say, every year 5 crores here. 5 crores is too less. Let us say 25 crores here. Here I may be receiving 40 crores premium every year. But at that point of receiving 25 crores, 40 crores, I am carrying a huge risk. God forbid, if something happens tomorrow, I will not be able to pay them. I'll have to sell off my entire insurance assets and business, and I will be bankrupt. To avoid that, a common practice is what is called as co-insurance. What is this co-insurance? That when I have to take a huge policy, which I believe independently is not possible for my company, I take other insurance companies as partners. So there are multiple insurance companies, Indian, foreign, both, right? Now, both these stars have approached me, but I know that this risk is too huge for me to take individually. So I become the lead, that is the main insurance company, and all these people becomes my partner in this. So they become the co-insurance companies. Now what will happen? I will receive the main premium first, 25 and 40 crores. And since the risk is being divided between the other three insurance companies also, obviously, while dividing the risk, I'll also have to divide the premium. So what I do, I collect the whole premium every year of 25 and 40 crores, and I pass on some portion of the premium to the remaining three companies because they are taking the risk along with me collectively. In this particular case, what the law says that once I have collected the premium as the lead insurance company, I would have paid GST on that. Now, in fact, presently that also is exempt, but let us say wherever the GST is still applicable, when I take this premium and I pay GST on the entire premium myself. So who am I? I am the lead insurer. And I have already paid the GST, whatever it is, CGST, SGST, IGST, whatever is applicable on the entire premium. I have paid it. Now, what I'm doing, I'm dividing this premium. I'm distributing the premium between my other co-insurers. So this division of the premium, correct? Now they are using the word co-insurance premium. So whatever 25 crores, 40 crores, I have to divide between them because now they are going to share the risk. This division, they have made it tax-free. Why? The simple reason is if I have already paid tax on the main premium, the same if I'm dividing again, why again they have to pay tax? Ultimately, the government has got tax of the main premium and it is the one insurance policy. Internally, we are dividing. So this internal distribution of premium will not be leviable to GST. That is what is the point. Correct? Next, similar to co-insurance, there is another concept, students, of reinsurance. Now, saying the same example, I am the insurance company. Again, both Allu Arjun and Yash both comes to me to get their policy done, again of the same amount. Now, instead of making other insurance company my partners, I make them junior insurance company. So what is junior insurance company? I am appearing as the only insurance company who has done the entire policy of 500 and 750 crores. But what I have done after receiving the whole premium and after making the whole insurance, I take again three different insurance companies and I do what is called as reinsurance. So what? I have given insurance to them. I take the same insurance from these companies so that again my risk is minimized. So I may have taken the insurance of total 1250 crores. I will do reinsurance of 1000 crores. So what I've done is I've reduced my risk. So this 1250 crores, out of that 1000 crores, I have got reinsurer from different other insurance companies internally. Now in this particular case, again what will happen is I collect the gross premium, right? Now out of this gross insurance premium, I will have to again pay premium to these other companies. Now interestingly, if you know, students, in this insurance business, there is one very important element, that is commission. And you all know that the commission is calculated on on the premium amount. Now, again, continuing the above point, whenever I get these policies reinsured, what I will be doing, I'll have to pay some premium again to the lower companies. And important, for getting this policy, we pay commission to our agents. So these companies will be paying me commission because I have given them business. So internally, what will happen? Out of the total premium, the gross premium, whatever I'm going to collect, I will pass on some premium to them. But while passing on the premium, I will say, boss, give me commission on that because I'm giving you business. So obviously, what I will do, this commission I will deduct from the reinsurance premium. So I have to pay these companies the premium because now out of 1250 crores, 1000 crores I'm getting reinsured from them. And while doing that, I am also getting commission from them. So now what has been kept outside GST is this commission. So in the above entry 9, we kept the premium outside. Now there is commission on the premium. So that premium is kept outside through entry 10. So both these entries 9 and 10 are dealing specifically with the reinsurance, co-insurance, which is a common practice in the insurance industries. Fine, students. So this is the end of schedule 3, which is one of the most important schedules. Now here we'll take a small break of 10 minutes and we'll come back to understand the other aspects of what is not a supply. Fine, students. moving ahead with the list of no supply, we have the second aspect. So first aspect was Schedule 3. Now in the second aspect, we have some activities which are notified as no supply through notifications. Now in this, what are the activities? So first is those services which are in relation to functions which are given to either panchayat or to municipality, against white these article numbers will again be treated as no supply. So this you can always now understand. I have given you analogy above in Schedule 3. So whatever are the constitutional statutory duties. So over there it was performed by various bodies like courts, members of parliaments, etc. Now here they have added when this same activities are done by panchayats or municipalities, or anybody is providing the services which is in relation to functions entrusted to them, that will be no supply. Next important thing. Now we all know that GST is not applicable on supply of liquor because liquor is a state subject. It is outside GST law. So that is done. Now the point is, when we are talking about liquor, there is one act whereby the state government gives you a license. Without license, you cannot run the liquor shop or you cannot serve liquor in the hotels. So for doing the liquor related business in your state, the state government gives you license. Now for this license, definitely there is a license fee. Now, even though liquor is out GST, but there is a fee, and in fact, the fee is a handsome amount. Now, for this, again, a notification was issued which said that we will not tax this service, which is granting of license. So granting of license for selling, serving liquor is kept outside GST. Now, there are some circulars. So the circular is saying, now for this, you have to understand the concept of distinct person. We will require this concept again later on. So let us now understand this concept. Now students, in GST law, when you register, you are given the registration number which is called as GSTIN. Under GST law, when you are doing business across India, by having your shop, your factory, your office, or any of your business premises at different places, you need to take registration for all the places. So all your business places should be covered in your registration certificate by mentioning them. Now here, there could be a possibility. One, you are having business places in different states. So you have one in Gujarat, one in Maharashtra, one in Tamil Nadu, one in West Bengal, one in Delhi, one in Jammu. So you have your business place in different parts of India. What does the GST law says? If you are having business places in different states, this registration has to be done separately. So you'll have a separate GSTN here, separate here, separate here, separate here, separate here, separate here. Because GST number, 15 digits number, is state specific. First two digits of the number represents the state. So you have a state code given. For each state, there is a state code. And first two digits of the GST number represent the state. Now, in this relation, students, what we have to understand? We have to understand that GST law, when makes it compulsory to have a separate number in each state, GST law has brought a concept of distinct person. What is this distinct person? That in this example, I am having 6 registrations. Now, please remember, I am a single person. I have one PAN because I am a one person. Let us say all these are my offices across India. So I am one PAN CA Vishal Govind Prasad Podar. So my PAN number is one because I am one legal person, right? Now, interestingly, even though I'm one legal entity, one legal person, in the eyes of GST, I am six different persons. So, if you have a separate GST number for the same business, for the same entity, in the eyes of income tax and for all other laws, you are one person. All these six is Vishal Poddar only. But for GST, there are six Vishal Poddars because there are six GSTINs. Similarly, let us say within the same state of Maharashtra, I have three business places, one at Pune, one at Mumbai, another at Nagpur. Now, within the same state of Maharashtra, when I have three different business places in three different cities, or maybe in the same city at three different locations, now here the law gives me an option. What option? I can take one single registration for all these three. So here this third number registration is covering all three places, or I can have separate registration for these three places. So this third number registration, this one is for Pune. Then for Mumbai, I take another registration. Sorry, the number will not be 4, it will be 7. And for Nagpur, I will take another registration. This is an option. Now, if I take separate registration for Pune, Mumbai, and Nagpur, so now the total number of GSTINs which I am having is 8. So in the eyes of GST law, I am 8 persons, 8 different persons, which is what is distinct person. So what is the concept of distinct person? The same person having multiple business locations which are having separate GST registrations. So each of the GST registration only for the limited purpose of GST, you have to treat them as a separate person called as distinct person. Now, what is the present circular dealing with? I am in transport business. So this business is not my CA practice. This is a transport business where I am running. Simple example, I'll give you buses. And I have taken registration in so many states. Why? Because I'm regularly running buses between these places. So I have kept an office at every place, which is a very common feature with transport business. Now, this may be goods transport also. This may be passenger transport, or it may be anything. Now, in this case, interestingly, what is happening when my bus is going from Pune, which is in Maharashtra, to another place, which is Chennai in Tamil Nadu. The bus is running between these two states. There was a confusion created that the bus which is going from here to here. Now, what is the bus? The bus is the mode of conveyance. Please understand this. It is not my goods. I'm not selling bus. It is in fact my mode of transport through which I'm doing my transport business. But when this bus is moving between two states, which is called as interstate, some people gave this analogy that this is a supply of bus by my Pune office to my Chennai office. Since both are in different states, obviously the GST number would compulsorily be separate, and we are two different persons. So this becomes supply and there has to be tax. Now, this the law never intended, but maybe this could be one of the uh, interpretations that is coming out of the present GST law. To avoid this type of interpretation, they said that wherever there is interstate movement of the mode of conveyance, which can be any of these are all modes of conveyance. Why? Because your business is carrying goods or passengers. So for transporting the goods or for transporting the passengers from one place to another, you are using them. Or you have to send the vehicle for repairs. So many times it may happen that for repairs, I'm sending it to another state because over there is a good repair facility. So for any reason, when I'm moving my mode of conveyance, such movement will not be treated as supply and hence not leviable to GST. Correct? So this movement, since it is not done for any intention of supply,
The only purpose was I'm doing my business. For running my business, I'm going from one place to another. There will be no GST on the movement or the traveling of my buses. So no GST on the bus per se. Obviously, on the transportation activity which I'm doing, will be GST where I'm sending it for repairs. I'm getting the repair work done. So the repair person will charge me GST. That is correct. Now, on similar lines, many times what I am doing is I am moving my tools, my rigs, my spare parts. Now, actually, what has happened? I'm not actually moving them. These are part of the above modes of conveyance itself. Now, many times, see, this term is used. Why? Because I'm having a crane. What is my business? You require a crane for doing some work. So I send my crane to that place, and that crane will do the lifting work, putting work, whatever you want to do. And I will charge you for this. Now, in the crane, many times, many items like tools, decks, spares are kept because that are required for doing that activity. Now, when I'm shifting my crane, that is no supply, that is already done above. And along with the crane, whatever are the parts which are kept inside it, again, my intention is not selling the parts, not supplying the parts. So again, whatever parts are also moving interstate between my one entity to my another entity, it will also not be treated as a supply. That is what is the clarification. Now, about two clarifications are okay. They were obvious, but just to out of ultra caution, the lawmakers thought that we will clarify them. Now, what is very crucial, students, is this. Now, until last year, or more specifically last year only, there was a confusion about vouchers, which has now been clarified. Now, what is this confusion? What is this voucher? Now, we all know nowadays, now see, this is what I was mentioning at the start. The businesses are changing, the methods of doing businesses are changing, and new items or new modes of doing business are introduced. Now, one such mode is voucher. Now, what is this voucher? So many times, let us say I have to gift my friend something on my friend's birthday, but I'm not very sure what is his or her liking. Like, let us say I wish to give them some wearing apparels, some perfume, some very special shoes, footwear, but I'm not very sure that what is their exact taste presently. Now, if I'm giving them something very expensive and tomorrow if they don't like it, so for me that particular gift will not be serving the purpose, what was my intention to make them happy. And even from their side, they will feel burdened that, okay, I've given such a costly thing and still they are not using it. So from both sides, it will not be a good situation. So the businesses came up with an interesting feature of vouchers. Now, what are vouchers? So I go to a mall, I say, "Hey, boss, I have to gift my friend something, but I don't know what is their exact liking. But my budget is rupees 10,000. So I pay 10,000 to that mall or to that particular brand, and they give me, now the technical word is instrument, as the simple word is, I will say, a document. Now this may be a pre-printed document or they will give me some type of chitti or receipt, which will show that they have accepted 10,000 from me. So I have deposited 10,000 with them and they have accepted 10,000 as a consideration or part consideration for a future supply. Now, what will happen? Today, I pay 10,000 to that mall. They give me this document, this piece of paper, which is writing the name of that particular shop or store, and it is writing 10,000 and maybe with some conditions, etc. Now, this document, which is called as a voucher, see here the word instrument is given. I'm using a simple word so that you understand, and you have seen this practically. Even you can try it now also. So when I take this voucher from that mall by paying them 10,000, and what I will do now, I'll give this voucher to my friend so that my friend can buy anything, whatever he or she likes, and that will serve both purposes. So for them also, it will be useful. They will be actually using it, enjoying it. And from my side, I'll be happy that I gifted something worth to my friend. Now, what I have done is I have paid 10,000 to this store. That store has given me this document which has this 10,000 written, and this 10,000 rupee document, which is called as a voucher, will now act as a consideration, either full or part. So whenever my friend will go to that same store to buy anything of their liking, they will not have to pay 10,000. Now the question was that tomorrow, whatever they are going to buy, let us say my friend buys a trendy blazer which is of, let us say, 15,000. So my friend will pay only 5,000 because 10,000 I have already paid. Now there is no doubt about tax on that 15,000 blazer. That is okay. The question is, what will happen about the 10,000 rupee voucher? Now this printed document, which is called as a voucher, again, there was a lot of debate, dispute on this, that whether when I am taking this voucher, whether there should be any tax on the voucher per se, that is voucher itself. Now, interestingly, in time of supply provisions, when uh, we will study, though now that provision has been removed, but there was earlier a provision relating to time of supply of vouchers. So the question was, what is this voucher? So when I'm purchasing this voucher today by paying 10,000 to that mall, to that store of the mall, I have paid 10,000. So when I'm purchasing this voucher by paying that 10,000, whether there is any tax on the voucher, and if there is tax on the voucher, what exactly the voucher is? Will it be considered as goods? Will it be considered as service? So over here, a clarification has come by interpreting the definition of voucher, by interpreting the definition of money, and by interpreting the definition of prepaid instruments as given by RBI. What has been concluded? So the conclusion is that voucher per se is nothing but a different way of making consideration payment in advance, and the voucher is nothing but like money. I'm using this word like money just for your simple understanding. So from this analogy, that voucher will be acting something like a money. Hence, there is no tax on money itself because money is a medium of payment. It is a medium of exchange. So there can be no tax on medium of exchange. So on that analogy, this has now been clarified. What is clarified? So within vouchers, different scenarios have been answered. Now we have to understand that where the voucher is acting as a medium of payment, there should be no tax. But how and why there will be no tax? So for this, different scenarios are created. First, where voucher is covered as a prepaid instrument as recognized by RBI, and that is what I just gave you example. So I paid 10,000 and they gave me this voucher. Now what is the purpose, or what is the uh, utility of this voucher? Now this voucher, whoever to whom I give that voucher, or even if I use the voucher in future, I will not have to pay 10,000. So that voucher is acting as a prepaid instrument, and the moment it acts as a prepaid instrument, in this case, it will become money. And I'm sure you all already know this because you have studied GST earlier, but later on also we'll study the definition of goods and service. In the definition of goods and service, we all know money is excluded. So automatically this voucher, which is used as a prepaid instrument for acting as a consideration in future whenever you buy the goods and service, this voucher becomes similar to money. And since it becomes similar to money, there can be no tax on voucher. So first situation, I buy this voucher today, which will be acting as a prepaid instrument, so which is equivalent to money, so no tax. Second possibility, the voucher is not covered as a prepaid instrument. Now, the moment voucher is not covered as a prepaid instrument, it cannot be treated as money. Now you will say, sir, what is this new voucher which is not to be treated as prepaid instrument? So I'll give you another example. See, this again, I'll give you a real life example. I'm sure you all may have seen it somewhere directly, indirectly, that many times when employers have to give some facility to their employees, for giving that facility, they use some coupons. Now, there is a very famous one of the coupons which is called as the Sodexo coupon. What is this Sodexo coupon? So there is a company, Sodexo. What it has done, it has tied up with various businesses. And what it has done, it has said these businesses that I will be issuing a coupon in my name, which will be called as the Sodexo coupon. And whoever carries this coupon, either you have to give them the amount, the item, the goods or service free, or you'll give it at the discount, and whatever is the amount that is written on that Sodexo coupon. Now, many times, what happens is the first stage is that this Sodexo company has tied up with multiple businesses, and within them internally they are going to do some settlement. But at your end, these coupons are used by you for availing certain services. Now, against this coupon, what has happened? There is an obligation which is created on the supplier to receive this as a consideration or part consideration, and it assures you, who are you? You are the beneficiary or the voucher holder, that you can get certain goods and services which are mentioned in that coupon, which is called as voucher or a related document. Now here they are saying where such type of specific coupons are given. So first was a prepaid voucher where I made payment and you could go and buy that from that store. But second is similar to the first one, but slightly different, because now it is not of that particular store. It is of a independent company, like I said, Sodexo, who has done tie-up at its end with multiple stores and said that, okay, you can use my coupon anywhere. Now, in this particular case, this voucher, this coupon gets covered in the definition of actionable claim. Now, we have again discussed earlier that under GST law, actionable claim is covered in entry 6 of Schedule 3, and except for specified actionable claim, remaining actionable claims will be outside GST. Now, voucher is not covered in the specified actionable claim. We saw the list of those 6 actionable claims, which are mainly all the antisocial activities of betting, gambling, etc. This type of prepaid voucher or coupon, etc., is not covered over there. Now, since it is not covered over there, this actionable claim, which is in the form of this voucher, will again become no supply. Now, we analyze the voucher transactions in relation to different issues and scenarios. So first, whether transaction in voucher falls under the category of supply of goods or services. So the answer is, we have already discussed, wherever it acts as a prepaid instrument or wherever it acts as a actionable claim, both are not to be considered as supply of goods or services. So there is no tax on the transaction of voucher per se. Yes, tomorrow when you go to finally buy the goods and services, like in my example, my friend went and bought the blazer. So that blazer is obviously taxed. So there is no doubt about the taxability of the goods and services. But on the voucher purchase, there will be no tax. Next, what would be the GST treatment again of transaction in vouchers by distributors, sub-distributors, and agents? Now, this is important, students. Now, this is where the Sodexo example comes into picture. So, there is a company, Sodexo, which has done some tie-ups with multiple businesses saying that my voucher you should accept and I will make payment to you. And these vouchers are now sold by Sodexo company to its distributors, and distributors sell it to sub-distributors, sub-distributors sell it to agents, and you purchase these Sodexo vouchers from these agents. So in other words, for the Sodexo company, their trading item itself is the voucher. Now here, there are two possibilities. First, these vouchers are sold. I'm using the word sold to make it simple for you to understand, by the company to the distributor, distributor to the sub-distributor, sub-distributor to the dealers, etc. And this is done on principal to principal basis, means everybody becomes the owner of that voucher. So company sells to distributor, distributor sells to sub-distributor. So they all become owner of the voucher. So they are selling to one another on P2P basis, that is principal to principal basis. Now, even though you are dealing with trading of vouchers, but since we have already concluded about that these vouchers act as a payment mechanism, so they partake either the character of money, if not, it'll still they partake the character of actionable goods. And since in both cases, money or actionable claim, both are outside GST, hence the trading of such vouchers is not liable to GST. Then coming to the second business model, that the Sodexo company is not selling the vouchers to the distributors, rather it is giving the vouchers on some fee or commission basis. Now here the scenario changes because here they are not selling the vouchers to one another. So always the owner of the voucher remains Sodexo company. It says that now you act as my agent, whereby you help me sell these vouchers. So effectively, the voucher is sold by Sodexo company to the final consumer, whoever it is, an individual or another company. But between the Sodexo company and its distributor, the Sodexo company is not selling the voucher to the distributor, rather telling them, you get me clients, I will give you some fee or commission. Now here the scenario changes. How the scenario changes? Because here there is no trading in voucher. It is not on principal to principal basis, rather it now becomes principal to agent basis. Now in this cases, GST would be payable by the distributors. Why? Because now what they are collecting from the company is not payment against the voucher, because they have not purchased the voucher, they have not sold the voucher. Rather, they are collecting money in the form of commission for giving the service of helping the company get the clients to purchase the voucher. So now the scenario, the transaction changes and it becomes a taxable activity. Next comes another situation. What would be the tax treatment of additional services like advertisement, co-branding, marketing, etc., which is done? Now, see, whenever there is any activity other than sale of voucher, all other activities will be taxable. So, if the voucher is having some advertisement, now many times that voucher is a document. So, in document, somebody has put their advertisement. So, there is a branding, co-branding, whatever done by printing it on the voucher. So, wherever the voucher is going, that company's brand is going. That is taxable because then it becomes another service, another activity of marketing. Another issue is what is the GST treatment of unredeemed vouchers? Now, let us say I come back to the first example. I purchase the voucher from the store of 10,000. The store says, I'm giving you this 10,000 voucher, but it has a, uh, what do you say, validity period, which is up to 15th of August. Means whatever 10,000 you have paid to me, this should be used by 15th of August, either by you or to whoever who is using this voucher. It means if up to 15th August nobody comes to the store and purchase, the voucher will lapse, and thereafter that 10,000 will neither refunded nor any goods or service will be supplied against the voucher. This is what is called as unredeemed voucher or breakage, that is thereafter the validity of the voucher ends. Now here again a question came that when the voucher is having a validity, yes sir,
Sir, please share the meeting ID so that student can join the session on Zoom.
I have to share sir.
Yes, sir.
So I have to share with whom?
Sir, on screen, you can write the meeting ID.
Acha, I have to write the meeting ID on the screen.
Yes, sir.
Okay, sir. Okay, sir. 1 minute.
Students, please note down the meeting ID which sir is going to share on the screen. And through that meeting ID, you can join the Zoom session. And whatever queries you have during the session, you can ask your queries now. Sir will be continuing with the session, but in the meantime, whoever has any query, they can post in the chat box or they can ask through unmute also.
Sir, please write.
Sir will be.
So students, this is the meeting ID.
Sir?
Yes, sir.
Don't share the Zoom link, just only
Sir, only
meeting ID
meeting
you have
ID
to.
has to be shared, sir. Only meeting ID. Sir, you may stop sharing. We'll write the meeting.
Someone is sharing from your side, or should I write it down on my page?
Just open a blank page.
Yeah, I'm doing that.
सर द पेज यू हैव शेयर ना उसी पे आप लिख लेते।
कोई बात नहीं सर, मैं वो क्या PDF है उस पर नहीं हो रहा था, इसलिए मैंने एक सेपरेट पेज पे कर। स्टूडेंट्स प्लीज टेक अ स्क्रीनशॉट ऑफ दिस। Fine. So please take a screenshot of this so that you can then use this to join. So I'll be going back to my regular deliberation. You can now join this Zoom meeting using this for asking your queries. Done. I'll just swap to my page. So going back to our point. So I was discussing the treatment of vouchers. Now, when we are talking about voucher, students, keep this in mind that vouchers, as we discussed, is neither goods nor service. But there was a question that is arising. What will happen to unclaimed voucher? Because now, at least where the voucher was getting claimed, something was getting taxed in future, which was the final supply of goods or service. In my example, blazer. But what will happen if there is no sale at all, because nobody is coming to claim the voucher? That is, the voucher becomes an unredeemed voucher. Now, can you tax that 10,000 which I have paid? Again, the answer is no, because still the underlying subject matter, which is the voucher, is still outside GST, because it is neither supply of goods nor supply of service. And hence, since it is neither supply of goods nor supply of service, even the unredeemed voucher remains non-taxable. So there was a circular, students. This circular you will find reference in many places, because this is a generic circular dealing with those cases wherever there is cancellation of an agreement, wherever there is any breach happening, and because of that cancellation or breach, GST is imposed. Some payment or some penalty or fine is imposed. Now the question was that whenever any payment or fine is imposed for cancellation of a contract, for breach of a contract, whether that would tantamount to a supply and whether there would be any tax on that. So this circular has already clarified that there will be no tax on cancellation of an agreement or breach of any of the portion of the agreement. However, where there is an express contract for not doing something, so you have entered into a specific contract where the requirement of the contract itself is that you abstain from doing something, you don't do something, and that is what is the performance given to you in the contract. In that particular case, students, that contract only will be the taxable supply. Now coming back to our scenario, so we have a circular relating to our scenario which clarifies that. Yes, Ravinder, just wait for a minute. So which clarifies, yes, students, whoever has a query may raise your hand, and after I'll complete this point, I'll come to you. So now we have a circular which clarifies that it appears that the amount attributable to non-redemption of vouchers will not constitute a monetary value of any act or forbearance. Hence, since it is not constituting an independent supply, there will be no GST on the amount which is attributable to such unredeemed vouchers. Fine, students. So I have come to that stage where we have completed the negative list, the no supply list. So now I'll unmute you, whoever raises your hand, and we can take your questions up to this point. Yes, Kanaya. I have unmuted you.
Yeah. Good morning, sir.
Good morning, Beda.
Sir, I have two, 3 points. Like my first point is like when it was mentioned that the custom bonded warehouse in section 7(2)(a) para 8.
Go ahead, ask your question.
So in custom bonded warehouse, sir, it also covers the custom area and other warehouse which is registered in custom.
See, custom warehouse is a very specific place which is identified and which is licensed as a custom warehouse. Correct? So you can only store goods only in the custom designated, custom licensed warehouse. Right? When you read the definition of custom area, that is very wide. But when you see the definition of custom warehouse, which is given in the custom law, it is very specific. So it is only those places which are warehouses and which are licensed, which are appointed by the Commissioner of Customs. Fine, Beda?
Okay, sir.
Go ahead.
Thank. And the second one is, sir, when you talk about the co-insurance and reinsurance, sir, my question is like when insurer share their premium with other insurance, that would be exempt from GST,
Yes.
right?
So that is treated as no supply. That is the main point. Why? Because on the whole insurance, already the lead insurer has paid GST. Now, anyways, now the new amendment is that in few cases the insurance policies are exempt, but we are taking the example of those cases which are not exempt. So wherever the insurance policy is taxable, the lead insurer has already paid the tax on the entire premium. Now that premium is simply divided. So they are saying if the tax has come to the government on the main premium, the whole premium, now the internal division will not be taxed. Correct.
Okay. And the second one is reinsurance. So in that case, when we share the commission to the agent for reinsurance, then in that case also the GST is not applicable.
Now again in reinsurance, what will happen? See, again to me, my agent has got me this huge policy. So I have to pay some commission to my agent, that is taxable. But now when I'm dividing this policy by doing reinsurance with 3 insurance companies, so for those 3 insurance companies, I am acting like an agent because I am giving them business, correct? So what policy I had received, I am passing on that policy to other 3 insurance companies. So when I'm dividing this insurance policy between these 3 companies by doing reinsurance, so for them, I'm indirectly playing the role of agent because I'm getting them the business. So what I will be doing is indirectly I will be charging commission to them. So again, that commission also is treated as no supply as per entry 10.
Okay, sir. Thank you, sir. And the last one is, sir, in case of voucher, sir, you told us that P2P, when principal to principal, when they are
Your
selling.
voice is cracking. Your voice is cracking. Please repeat.
Hello. Now, is it audible, sir?
Yes, now audible.
Sir, my question is, when we are selling voucher in case of P2P, the one principal selling the voucher to other principal and other principal also getting some type of commission or charge from the first principal. So in that case, whether that would not be covered under GST?
Understand one thing, Beda. See, either you'll do principal to principal or you'll do principal to agent, right? Now, when you are using the word that distributor has sold the voucher to a sub distributor or to the lower agent, it will be P2P, and then in that case there is no commission. Please understand one thing, whenever there is commission, you never sell the goods to the other person. You give the goods, okay, take these goods. Like I'll take back you to accounting example of goods sent on consignment. We have studied this in accounts. Now over there, what term we use? Goods sent on consignment, which means that you have only sent your goods to the consignment agent. Ask the agent, okay, now I'm sending my goods. Do one thing, you sell these goods in market. You have not sold the goods to the agent, you have sent the goods to the agent. Similarly, using the same analogy, two possibilities. Either I sell the vouchers to that agent. Now, see, when I'm selling something to the agent, my responsibility is over. I have sold you the goods. Now, whatever you want to do, you do. That will be non-taxable because voucher are neither goods nor service. But if I have only sent the vouchers, not sold the vouchers to my agent, told them ki Baba, I'm sending you the vouchers, you go and do marketing, take my vouchers every day, knock on every person's house, tell them that okay, I'm selling you these Sodexo vouchers. If you are purchasing these vouchers, my company will give you this benefit. And at the end of the day, that agent has sold 1,000 vouchers. Importantly, that 1,000 vouchers, the agent has not sold, the company has sold. Only the agent has went with the vouchers, done the marketing. Whatever money is coming directly to the company's account, and then the company is saying, okay, today you sold 1,000 vouchers. For 1,000 vouchers, I'm giving you 5,000 rupees as your commission. That is commission which is taxable. But if the company has upfront sold the vouchers to the distributor, sub-distributor, etc., and they are further selling to one another, then the property in the voucher itself is passed on. Then that transaction is not taxable. So sale and commission will not come parallelly. This is what I'm trying to tell you.
Okay, thank you, sir. Thank you. Understood, sir.
Great. Yes, Radha.
Yes, sir. Basically, with regards to Kanaya's question, I would like to second one thing that you said about reinsurance, right? That it is being segregated. So can you tell me about like I'm not getting about why it is not being explained.
See, the logic is very simple, Radha. I can tax it, but understand one thing. See, I'm here. I am the lead insurance company. This is the policy holder, who in my case was either Allu Arjun and another person was Yash. Now, first service is given by me to them, which is of insurance. Correct? Now, I am taking other partners. I'll use the word partners, and I'm distributing my risk with them. Now, effectively, when I'm distributing my risk with them, what is happening is the premium which I have received here, that premium I am sharing. Now, mark these words. I'm sharing with them. Correct? See, this if not done, what would have happened? All of them would have charged me GST on the premium which I have shared with them. I would have taken the ITC of that GST, and that ITC I would have utilized while paying my GST. Effectively, government would have got GST only on this final amount, because whatever these people are charging to me, that is ITC. Correct, na?
Right.
So government thought that why to unnecessarily increase one leg of transaction and making it burdensome, because see, the moment it is taxable, you have to raise invoice, you have to do reporting, this person has to do ITC, and everything has to be done. So the government has removed that limb. So to remove, or you can say, as what we are using the term, easing out the business, they have said that don't levy GST, because ultimately I'm going to get the same amount finally.
Yes, sir. Now it's perfectly clear. Now I'm having a few queries, sir. So I will
Please.
go hand in hand. Like the first one, sir, at the starting of the session itself, you said that in 1994 globalization came. Wasn't it in 1991? With regards to
See, again,
yeah.
it started from 1990 because there was huge crisis like how we are having today,
Yes.
the global oil market crisis that started in 1990, and after that the government started taking different measures. So I agree with your point, 1991. I said 1994 with the perspective because from that year the major taxation related changes happened, like service tax was introduced, policies in import export were changed, etc. But you are correct. Technically, the process started from 1991. You're right.
Okay,
I
sir.
was saying from the taxation perspective.
That's no, sir. That's good that you clarified that. The another one query is, sir. You said that there is a constitutional definition for GST. What is it?
Yes. Okay. See, the definition of GST under Constitution is that GST is a tax on supply of goods or services except alcoholic liquor for human consumption.
Okay, got it. So next one, with regards to Consumer Disputes Redressal Commission, how the power is derived from the Constitution, since it was specifically written that it's not given
Sorry.
in.
Your voice is breaking.
Okay,
Your
am I
voice is
audible?
breaking.
Yeah.
You're audible, but what you asked question I could not hear because at
Okay,
that time the
okay.
voice
No
was.
issues. I will go slow,
Yeah,
sir.
tell me.
With regards to Consumer Disputes Redressal Commission, okay, you said that there is no Article 323B giving specific powers. Then how it is deriving power from the Constitution? Because it is having similar characteristics of tribunal. That's why.
Yes. So see, very good question, Radha. See what happens many times, like even now I'll change from constitution to act. Look at GST Act. Everything is not given in the act. Certain things are given in rules, certain things are given in notification. But issuing these rules or notification, the act is giving power to government or to some board to do something, which is called as a delegated legislation. Correct?
Okay.
In similar fashion, when you read constitution, see when the constitution was crafted 1950, or rather it started from 1948 the process, and we finally accepted the constitution in January 26, 1950. At that time everything was not figured out or everything was not thought of, right? Slowly steadily they started amending the constitution, but again every time it was not possible to amend the constitution because we are seeing presently also where government is trying to make some constitutional changes. It requires a special majority, which is a long drawn process. So what is done many times in any law, whether it is constitution or any specific act, smaller things, the power itself is given in the act, which may be here constitution, or in my example CGST Act or Income Tax Act or any act, to do that things by a lower level authority. Like here in maybe instead of parliament it can be done by the government or by some specific body. So the same thing happens in constitution, that it may not write specifically the name of consumer dispute redressal, but the mechanism through which this consumer redressal commission comes into existence, that mechanism is drawing power from the articles of constitution, and that is how we are saying it is bearing the same it is on the equal footing with tribunal. And since it is on equal footing with tribunal, which is drawing power directly from constitution, but this is drawing power indirectly, hence it is on equal footing, you will exempt it or exclude it.
So that is being ultimately presumed that it's drawing powers in
No,
that way.
drawing power is not presumed. Drawing power is express, but
Okay.
expressly what is not written this name. Because see, as we are expanding, like today, yesterday, our Honorable Prime Minister announced that now there will be a special fast track court for resolving this education paper leak related issue, right?
Yes.
Now let us say for that again a committee is formed, something like this.
Okay.
Like how you have Consumer Dispute Redressal Commission, tomorrow let us say they will say that Education Dispute Redressal, some board or some commission or something is appointed.
Right.
Again, now the question will come, what is this? It is again parallel to tribunal because it is given the powers of tribunal. So how we know it is tribunal? Why we are saying it is parallel to tribunal? Because when you read the constitution of this commission, or let us say the new one which will be formed on the basis of yesterday's Honorable Prime Minister's statement, when you read the constitution of that and when you see what and how the powers are drawn, you will find that it is drawing powers through constitution only. And the moment you find that it is drawing power through constitution, it will become equivalent to tribunal or court. And moment it become equivalent, so what we are presuming is only that it is equivalent to tribunal, but we are not presuming that it is drawing powers. Power, you see, you cannot presume that power is drawn. Power has to be given specifically. So when you read different articles, powers are given specifically in the articles, but they have not named the specific commission or the body which is to be created under that, because that will be subject specific. Are you getting my point?
Yes. I got it. That means they are just giving a generalized perspective in the constitution. Like in the constitution, a general
Yes.
perspective is given, and from that we are we are drawing powers, and we are assuming that okay, it is having the characteristics of tribunal or any commission.
Again, we are not assuming, it is
Okay.
actually having the character. See, what is the
Okay.
presumption? Understand? The
Okay.
presumption is, see, when you read constitution, the name given is tribunal. In
Yes.
fact, now today we have GSTAT, that is GST tribunal. Again,
Correct.
the name of GSTAT is not given in the constitution.
Yes.
Understand this?
Yes.
Because nobody knew in 1950 we will have something like GST, and
Right.
we will require a GSTAT. But they have given the power to make tribunals. Similarly, in that power, they have given power to make tribunals and similar other bodies to do this. Now, when
Okay.
any of these bodies are formed, even though their name is not specifically covered in the constitution, but it is still drawing power from the same article of the constitution. So we are saying, we are not presuming, the power is given there. Only what is not given is the express name. Like in the constitution, you find the express name of Supreme Court, you find the express name of High Court,
Yes.
but you don't find the express name of GSTAT.
Yes.
Similarly, you will not find the express name of all these committees and commissions because they are formed at different points of time. Now, in next 1 month or 2 months, we'll have this Education Dispute Redressal Commission or something of similar name. Again, the name is not there. Why? Because it is formed today.
Formed today, yes.
And I cannot go back to changing constitution because again, that may take 6-8 months and the
Correct.
process will be delayed.
Yes.
Understand?
Yes, sir. I got it. It's perfectly clear. Sir, with regards to CAG, you said that no GST would be levied because it's deriving constitutional power. Like how? That's what it's unclear.
So again, see, that's what I'm saying. Very soon, if I'm correct, you will be having a subject of constitution also. Even
Okay.
if it is not there, you just go and read constitution. You will find all these, like CAG name is already there in the constitution,
Okay.
right? So
Yes,
since the
yes.
name itself is specifically given there, so the power of CAG is, or the rather the creation of CAG is through the constitution itself.
Yeah, I
And the
have
moment
read
CAG
that.
is created through,
Yes, yes.
yes,
Yes, around, I guess, Article 248. I'm not remembering exact article number, but yes,
yes,
in that CAG is being specified.
okay, great.
Yes, yes.
Frankly, I also don't recall the article number, but it is there. Correct. You're right.
Yes, sir. So thank you, sir. Next question is with regards to sir, you said about the immovable property stuff about the land, right? So you said
Yes.
that it can be only used for agriculture purpose, for leveling and drainage lines. That was not clear to me.
No. I
I
never
heard
said
some
it can be
agriculture
used.
word, yeah.
Yeah, so I was saying NA. NA means non-agricultural.
Oh,
See what
okay.
happens when a land is there. Many times in India, as you know, historically, we are doing agriculture. So majority of the lands are classified in India as
Yes,
agriculture land, right?
correct.
Now, if you want to do any activity other than agriculture, you'll have to first get it NA. Getting it NA means you have to convert it agriculture to non-agriculture. Only
Okay.
then you can do all these activities of then doing construction, using it for other purposes. Now, I was giving example that there is a barren land or an agriculture land. If you sell the land, it is land, no GST. But
Yes.
nowadays, you'll find in every city, even in your city, wherever you belong to, Radha, you'll find this that now many areas we say that now this has become a plot, you can go and purchase that plot.
Yes.
But that plot few years back was an agriculture land. But some developer thought that, okay, this is the upcoming area. And now there will be requirement because of increasing population or shift in population from rural to urban areas will require more area to do construction of buildings and malls and everything. So some builder developer to purchase that agriculture land and did the process of converting it to non-agriculture and then developing into plots. That is what I was explaining. But anyways, whether it is agriculture land, non-agriculture land or plot, ultimately everything is land, correct?
Correct. Yes.
Selling that will be outside GST. That is what para 5 says.
Yes, sir. Then, sir, with regards to one thing, like I'm curious to know that you said about online money gaming, right? Where staking of money is
Yes.
done, gambling, betting. So, sir, how the GST would be taxed? Definitely, it is taxable. Like how the government is actually finding out that okay, this kind of transaction is happening because it is on a huge scale.
Okay. See, now there are two internets. One is everybody's using, and the other one, which is called as the dark web.
Yes.
Dark web is something which is outside government's control also because it is done very secretly and it is done through a different
Yes.
mechanism. So how we are using regular internet where we have Google and all these extension Chromes, dark web has altogether a different extension, right?
Yes.
That is outside government's control. Now, I'm giving you a very practical example. If I'm not wrong, it is 3 or 4 years back. You all would have found, definitely you all would have read that news somewhere, that government has banned some 16 Chinese app and one of the famous was TikTok.
Correct. Yes.
Now, answering your question, if the government did not know and did not have the control, how it could have banned? Because TikTok is going on. See, one is you close down the TikTok company, but that is
Yes.
not possible because that is not in India, that is in China,
China.
right? Or even the China may have kept the company somewhere outside China, but everybody knows it is Chinese driven, right?
Yes. Yes.
But what the government has the power, see the regular internet, which is not in the dark web, in the regular internet, the government has entire control. Again, giving another example, many times you hear that here there is some terrorist are hiding or there is some encounter going on. So they block the internet of that particular place,
Yes.
right?
Yes. Yes.
Or like right now, some protest is going on in some place. So the government has the power so that they block the internet. So the regular internet is within the government's, you can say, control. Wherever they want, they can block the internet, they can block the apps. So that is how the government knows about this online. So now whatever online gaming companies are on the regular internet, not in the dark web, that is all within the government's control.
Yes, sir. I
They,
got
they
like
will not.
geographically, every government, like whether Indian government or any other country's government would be having control in that geographic
Yes,
region. Yes.
yes,
I think on the mighty it is being regulated.
exactly. It's good to know that you know MIT. Perfect. So
Yes,
it
sir.
is actually under MIT that the government has this.
Yes, sir. The next one, with regards to
Just
high C.
one second, Radha. Can I just take up Rohan for a minute because he says he has to leave for articleship.
Okay, no issues, sir.
So you may
Please.
just remain there, but I
Yes,
think
yes,
Rohan has
yes.
already left. Oh, sorry, Rohan has left. No problem. Then Radha, you can continue.
Okay, no issues, sir. They can ask via mail also. That's okay.
Yeah.
Yeah. So next one is high C sales. With regards to like so you explained with regards to sell in transit. Now, who is going to pay custom duty? That was unclear to me.
Okay. So when we were talking about this, all these activities, merchant trading and all, so you are asking specifically about high C sales. So see,
Yes.
the custom law says that the last buyer, or I will put it in other words, the person who is finally go to customs and clear the goods will have to pay the duty.
Hmm.
So the answer is, your question is, who will pay the duty? It is the last buyer. So let us say I sold to you, you further sold to Rohan, and all this is happening in high seas. Finally, who is going to the customs to finally clear and collect the goods? Rohan. So when Rohan will go, Rohan will have to pay tax on the final price, which will be including my or everybody's margin. So obviously, see, I got the goods for 100, I sold to you for 120, you sold for 130. Now Rohan is clearing the goods, and at that time, the last invoice which Rohan is having of purchase is of 130, which you have given. So Rohan will pay tax on 130 at the time of clearance. So government will get all our change tax. So indirectly, government, see, most important here, nowhere the government is in a loss. So I purchased for 100, I added margin of 20, you added margin of 10. So finally now the goods have become of 130. When Rohan pays tax of on 130 at the time of clearing the goods, government has got tax of all the legs.
Correct. So ultimate burden is being passed to the last buyer itself.
Anyways, that is what
Yeah.
is the principle in indirect tax. Who bears the
Correct.
ultimate burden?
The
The
final
final
consumer.
consumer. That is
Correct.
what is happening.
Correct. Sir, with regards to the distinct persons, you were saying a person is taking registration in the same state of the three cities, Pune, I guess, then Mumbai and Nagpur. So,
Maharashtra, Nagpur.
yeah, so you said 378. Like, what is three in that? Like, why you said that?
See, why I said three? Because here, when I was giving example of different states, I had put Maharashtra as number three.
Okay.
Now, first possibility is within Maharashtra, all the three cities offices are having single registration. So the number will be three.
Okay.
Three means whatever is the GST number. See, GST number will be 15 digits. I'm not getting into that. But whatever is the number, I'm calling that entire GST number as number three for simplicity, right?
Okay. Okay.
So first possibility is within three. You have covered all the three places. So there is only one registration for all the three. So the number is only one, which is number three. Correct?
Yes.
Second possibility, which the law allows, that within the same state, instead of taking one common number for all the business places, you can have a separate number. Now, the moment you'll have separate number, what will happen? Pune will have one number, which is our original number three.
Okay.
And when these people will take a separate registration, their number will be another different number. So here I was having the last number as 6, so I had put them 7, 8. So
Okay,
1
got
to
it.
8 are your
Yes,
8
yes.
GST numbers.
Correct. So 8 distinct persons in short in that
Yes.
one.
In
Yes,
this
sir.
example, 8 distinct persons.
Sir, another one, like with regards to repairs, you were saying about interstate. So, under distinct person itself on repairs, like how the GST is like not taxable in that. That is what my
No,
question
see,
is.
understand one thing. Repairs is taxable. If you remember, I clarified that repairs is taxable. But for repairs, I will have to send my vehicle
Okay. Yeah.
because you are going to do repair of my vehicle. Now, when I'm
Correct.
sending my vehicle for repair, there is no tax on the vehicle. See, vehicle is of 50
Okay.
lakhs, no tax on 50 lakhs.
Okay.
Because here in this entire list, what we are saying, the vehicles, the medium of transportation is not taxed. But I
Okay.
clarified that the transport service will be taxed. So whatever charges my bus is charging to each passenger, that will be taxed. Similarly, when I will get this bus repaired from some repair place, the repair and maintenance is taxable. But
Okay.
the value of bus 50 lakhs is not taxable. See, bus is going from here to here. So some people came out with this concept that bus should also be taxed. But I'm not supplying the bus to the other person.
Correct,
That is what is
correct.
clarified.
Yes, yes. Sir, next, I think this is the final query. It's with regards to express contract, which you were saying, that I didn't understood that how it is taxable. Like express, I mean, you were saying
Okay.
now that expressly it is being mentioned that whether it will be the terms of contract. So that was not clear to me.
Yes. So I'll tell you. See, this circular 178 had come to clarify what will happen whenever there is a payment of penalty, or in our words, we call it as liquidated damages, whenever something is not done. So let us take two examples. You and me have contracted.
Hmm.
I'm going to make payment to you because you are going to file my GST returns for the coming year.
Hmm.
Correct?
Yes.
But I have put a clause that if by chance you don't file my GST returns
Hmm.
in a particular month on time, or let us say you commit some mistake in the filing, since you have breached the contract, the main contract between you and me is of filing GST returns, right?
Yes.
But if you
Yes.
don't file the return, you miss the due date, because of which then I suffer some penalty by the government or the GST department. I will impose some penalty on you. So there is always a penalty clause in every contract, that if one of the parties is not honoring their performance, then obviously there has to be some penalty on that. Correct?
Yes. Yes.
That penalty is not leviable to GST. This is what this circular clarifies, because our contract was for doing something. The
Okay.
consideration in our contract is your fees, which we have fixed for doing this work of filing my returns. And obviously, in that, there has to be a penalty clause so that people don't break the contract. So I have put a penalty clause. I have put a clause which says that in case you do not file the return in time, or you miss the deadline, I will impose some penalty. Now, whenever I am imposing a penalty on you, the question was whether that penalty is leviable to GST. So first is, the contract was not for not doing something. The
Yes.
contract was for doing
Doing
something, and
something.
this not doing was put as a penalty clause. That
Okay.
is not leviable to GST. Second aspect is where we have agreed into a contract where I have asked you not to do something specifically. Now, what is
Hmm.
the example? You are also a chartered accountant. I am also a chartered accountant. You wish to start practice in the same building.
Hmm.
I will call you. I'll say, Radha, do one thing. Let us not do business in the same area, because then we will be competing with each other, and then it will unnecessarily lead to loss, because then we'll, let us say, you will try to reduce the fees, which is not correct, or you will try to give some freebies. So instead, you do one thing, you go to some other area, and since you are agreeing not to do business in my building or in my area, I am ready to pay you upfront 5 lakhs, so that you are also compensated, and for me there is no future loss of business, or there is no future competition. This is what is called as non-compete fees.
Correct.
Right?
Hmm.
Now, here, what is our agreement? Our agreement is specifically of not doing something. What is not doing something? You don't do practice in my area,
Yes. So,
which is called as
yes.
non-compete agreement. Now,
Yes.
here the charges which are decided again for not doing something are express charges. They are not like a penalty.
Yes.
So that is the difference. So where the contract is of doing something else, but if you breach, that is, if you don't do something, I will impose penalty. That penalty is not leviable to GST, because
Yes.
there is no supply involved. Here, the supply itself is, what is the supply from your end? You agree that, okay,
Non-compete.
I'll not do.
Yes.
That is an express supply, which is taxable.
Wow, sir. I'm really feeling glad to ask these queries with you because I got amazing analogies from you, and I'm really loving your teaching style, sir.
Thank you,
And
Beta. See,
thank you
this is
so
the
much, sir.
purpose why
Yeah.
I request everyone to be present live. Because, see, you can always listen to our lectures recorded, that is always available. But I request students that you all please be present live, because when you get your queries cleared live, see, one is I'm teaching in one, let us say, manner. But many times when these questions come from your side, I'll explain the same thing with different angle. And the moment I do that, it will benefit you more. Correct? So I'm also thankful to you that you are joining physically and also asking the question live.
Yeah, sir. And sir, any pre-homework to be done? What next topic you are going to take? So I will be
Complete
ready.
this chapter. This chapter will be continued in the next class. So you can complete the remaining part of this chapter. So,
Okay.
right, that you can do.
Okay, sir. Thank you.
Yeah. Thank you, beta. Good day. So I'll answer Rohan Kumar's question, which is in the chat box. So the question says, Sir, due to articleship, I have to leave. But can you once elaborate the entry 8AA, that is the SEZ or FTWZ for export? And one more doubt regarding contractual lecturers professors had in college. Will it be covered by entry 1? Okay. So Rohan has asked two questions. So first question of Rohan is dealing with this particular example or this particular entry 8AA, which says that whenever you are supplying goods which are kept in SEZ or which are kept in FTWZ, there will be no GST. So Rohan, I'll again explain. See, like how you have a specific place called as a custom warehouse. Now there are specific zones called as SEZ and FTWZ. So where some goods are lying in these SEZ, FTWZ, they are warehoused there. So instead of warehousing in custom warehouse, you are warehousing in these areas. Correct? Now in such cases, while the goods are warehoused in these SEZs, FTWZ, you approach me. I said, okay, I have my goods kept in FTWZ. Let me bring it and give it to you. You said, no, sir, let it be there only because I want to use it further there or I want to export it from there. So I have sold you goods which are kept in SEZ or FTWZ, like how I had sold you goods which are kept in warehouse of customs. Similarly, if the goods are kept in SEZ or FTWZ and keeping the goods there, if I'm selling it to you, even though you and me both are in the DTA, that is in the normal area, but since the goods are going to be continue to be kept in SEZ, over there only it will be there, and only I have transacted that those goods now I am transferring to you. Same like transfer of goods which are lying in custom warehouse. Similar footing when I'm transferring goods which are lying in the SEZ or FTWZ warehouse. That is what is outside GST. This is answer number 1, Rohan, to your first part of query. Second part of query is relating to contractual lecturers. So Rohan, here itself in the examples, I have covered that, but just for the paucity of time, I thought you all will read. So see, there are different types of workers. So there are casual workers, there are contract workers. Now the question is whether casual worker payment will be outside GST, whether contract worker payments will be outside GST. So here your question is specifically about contract worker payments. Please understand this, that whenever we are talking about contract worker payments, so there are two things. One is the business. Now let us say the business is a works contractor, that is a builder. Now he needs some 100 people. Now one is he can go to the market and get 100 staff, maybe on casual basis, vagara. That is outside GST because that what he's paying to the staff or to all those workers which this person is hiring directly is wages. It may be daily wages, makes no difference. So worker has to be permanent is not a requirement. A casual worker is also a worker as per the law. And again, I'll tell you one simple analogy. Apply the chapter of income tax, income from salary, right? So all these comes under income from salary for the contract workers, for the casual workers, non-permanent worker, daily wage workers. So it is outside GST. Second possibility is instead of this businessman going and searching for these 100 persons, he goes to one person who is manpower supply agency. He will tell this agency, boss, give me 100 unskilled workers or 50 skilled and remaining 50 semi-skilled and unskilled. Now what this manpower supply agency is doing, it is providing these 100 workers. And this particular businessman, that is a works contractor or builder, is paying the charges to the manpower supply agency for these 100 workers. Now, please be clear. There are two limbs to it. One is the payment which is done to the workers as their salary wages, that is outside GST, but the payment done to the manpower supply agency as his charges of doing the manpower supply, that is within GST, because what this works contractor or builder is giving to manpower supply payment is not a wages or salary, it is the contractual payment. So you have to see the actual nature of the payment, and that is what is important to. Happy Singh is asking me, sir, in the voucher section, what is the treatment of money in books of company if their voucher got expired? See, so that becomes their P&L miscellaneous income. So voucher expired, they are not going to supply goods. So what they do, they put it in the income side only. So for them, it is income. But please remember, GST is not on income. So we are not concerned whether it will be income or not. But as answering your question upfront, in the books of the company, it is income. Fine, happy? Excellent, student. See, being live is a fun. I always am very excited and I'm always very pumped up whenever I have students live, because then see you realize in this half an hour or 40 minutes what we discussed, that the same point with question and answer has gone to a different understanding level with many analogies. And also, I'm happy that people like you, like Radha and all, have read some mighty, are knowing something about constitution. So students, this is very important. So that is all from my side. Now I hand over to our HOD ma'am. Ma'am, good morning.
Good
Over to you,
morning,
ma'am.
sir. Good morning. Am I audible?
You're audible, ma'am. Please.
Okay. So, very good morning to all the students also. And after this insightful session, in fact, we saw how students interacted at the end and their queries were also satisfied. It was a very good session and all the students would have been, I hope they would have been benefited. So any suggestions students you have, we recommend all of you to fill the feedback form. And in fact, some feedback we have got during the session itself that students interacted and they got their queries also resolved at this point of time only. So in the last, for the timing, the format is that in last 30 minutes, you will get your queries resolved. So please get into Zoom session and get your queries resolved at the end. And as regards because these classes, one important information I want to share with all of you is that these classes are for May 2027 examination. So for those for May 27 examination, you have the cutoff date which is applicable is 31st October 2026. So all the amendments which have been made applicable or effective till 31st October 2026 will be applicable for the examination. But as of now, only Finance Act 2025 amendments have become effective. Finance Act 26 amendments will be effective from a date to be notified. So that notification, whenever it comes, we'll be sharing those amendments also separately at the end of these classes, because right now those amendments have not yet become effective. So we do not want to discuss them during the class so that students don't get confused. So in these classes, the position of law which will be discussed, position of GST law as well as customs that will be discussed with you will be based on whatever has become applicable till 30th April 2026. So customs amendments have become effective, but for GST, the amendments, if they become effective during the course of the classes, then the separate session or statutory update class will be there at the end of when these classes will be convened. At the end, we'll be having two separate sessions where we'll be covering the statutory update. But the position of law that will be discussed is all the amendments made by Finance Act 2025 as well as the notifications and circulars which have been issued till 30th April 2026 that will be discussed. Finance Act 2026 amendments, if they become effective during the course of the classes, then that will also be discussed, and whatever amendments will be left, that will be separately discussed in the statutory update. So don't worry, no amendments which are applicable for the May 27 exams that will be covered in these classes. They will not be left uncovered. And moreover, the notes which sir is sharing right now for discussing in the class, they will also be shared in some time, because you know that once the portal gets activated, they will be shared on the portal and you all can study from that. Study material will be available in due course of time. We'll be uploading the study material or hosting the study material on the website module wise, and there also you can refer the amended position. But right now, notes which sir is sharing with you, the discussions which you are having in the class, that will help you in preparing for May 27 examination. So please share the feedback, and in next session we might allow the students to unmute and share their feedback also, so that we can exactly know that yes, what are you liking about these classes, what else you want to be incorporated, or what can be improvised. So with this, we come to an end of the session.
Thank you very much. Thank you,
Yes,
ma'am.
Ma'am, one thing I wanted to ask you.
Yes.
I have indirect tax modules of September 25 edition, so can I refer that?
Right now you can refer them. And
Okay.
if you see, Radha, there will be at the end of each chapter or at the end of the select chapters, you will find a table which contains the amendments made or proposed by Finance Act 2025.
Yes.
When the study material was made last year, those amendments were not effective. So they were given at the end of the study material so that students don't get confused that whether it is effective or not. Now they have become effective. So whatever was provision you are studying, keep in mind all those amendments which have taken place through Finance Act 2025. You can refer that study material along with the statutory update. Statutory update for November 26 will be, though your exam is May 27, but I'm just telling you because till that time, 30th April amendments will be uploaded on the website very soon. So you can refer that also. And sirs, whatever notes sir will be sharing in the class, they will be updated notes. So you can refer that also.
Sure, ma'am. Sure.
Material
And
will be available in due course of time. So then you can refer the updated material.
yes, ma'am. And sir, just wanted to ask you that BAR Act, where to download it? I mean, I just wanted to know that. From where
What
I
you
can
want to download?
BAR Act of GST.
See, BEAR Act, you simply type BEAR Act,
Okay.
CGST Act, you'll get
Okay.
it. Plus,
Okay.
there are different, like even in on our institute's website, our institute websites in the technical section, if you go
Okay.
there, you will find the BEAR Act uploaded by the institute.
Okay, sir.
You can
Or you
use
can
that.
go
I'm
to
also using the
CBIC
same.
website. She can refer CBIC website also.
CBIC is also there, but I think, ma'am, that may be slightly complicated because CBIC website is very vast.
Yeah,
But
it
you
contains,
can,
actually it mentions all the amendments also as footnotes. So there
Okay.
we can
ma'am,
get.
even in our act also, which institute has hosted up to a particular, they are mentioning up to which date we are updated.
If you want to have entire BEAR Act, you want to see the BEAR Act, then CBIC website or other relevant websites are they can be referred.
Yes.
Otherwise, if you see the study material, for every provision, we have first of all given you the statutory provision. So they contain the sections, rules which are relevant for that particular discussion. Then we have the analysis portion, which contains the same section or rules in simple language as well as examples, illustrations. So that BEAR Act or BEAR rules have been elaborated or they have been explained by way of the in the analysis section. So what you can do is when you are referring the supply chapter itself, you will see that all the statutory provisions are covered at the beginning itself. The BEAR Act, the schedule 1, 2, 3, all of them have been given at the relevant places. So right now you can refer that, but yes, you want to see the entire BEAR Act rules, how they appear, or you want to refer them for any section or not section, I would say, but some rules are not covered in the syllabus because whatever relevant rules are there that we have covered in study material. So if you want to refer that, for that you can refer the other websites.
Sure, I will refer study material along with the BAR Act where applicable.
Yes.
Okay, ma'am. Thank you so much. Thank you
So
so much, sir.
whatever applicable BEAR provisions are there, beta, as ma'am said, it is already incorporated in our study module.
There in study material.
Yes. And the analysis section, as ma'am said, I will check it.
So BEAR Act is the main act and analysis is the simplified version of it.
Yes.
Okay.
You will see the statutory provisions section. So if you see the study material, you first of all refer the statutory provisions section. There you will get the BEAR Act.
Okay, ma'am. Yes. Done.
You are studying finals for the first time, Radha, or you are repeating, just for my knowledge?
Sir, I am a first attempt student. First time.
Great.
Okay, sir.
Good. So I think we can end the class now.
Yes, ma'am. Thank you. Thank you, everyone. Good day, ma'am.
Good day, sir.
Good day, all.
Recording stopped.
Sanket ji, over.